Today we have to start controlling, and I have sent the material to all of you. If anybody does not receive, let me know, I will send it. So this file contains the material up to internal order accounting, right? So this material contains the files for cost element accounting, cost center accounting, and internal order accounting. After that, we have profit center accounting, profitability analysis, integration, SD integration, product costing, and new GL. So for those modules, I will be sending the material separately. So first let us try to understand what is the functions and what is the significance of this controlling component. See here, controlling. This component is used to provide the information to the management for the performance analysis and decision making. So this component is mainly used for internal reporting. And there are three levels of management. That is lower level management, middle level management, and top level management. So you take any company, we have the three levels of management: middle level management, lower level management, and top level management. So the lower level management is always concerned with the data entry job. That's it. So they don't require any information. Now take the middle level management. The middle level management includes departmental heads. So these departmental heads periodically want to know the performance of their respective departments, how their departments have performed in the previous month, how a group of people in their departments have performed in the previous month, and for that matter, how every individual have performed in the previous month. So this is called performance analysis. So the middle level managers or the middle departmental heads, they want to know the performance of their respective departments. For that purpose, they need some information. That information is provided by the controlling component. And you take the top level management. So the top level management is always concerned with strategic decision making. What is the strategic decision? The decision which have the long-term impact on the profits of the company are called strategic decisions. I will give an example to make you understand the significance of this controlling component. See, we are producing and selling three products: product A, product B, product C. Now this year, the management wants to increase the production capacity of one product. For that, they need lot of other parameters. For example, first they have to look into see for which product they have the demand. So they know that for all the three products, there is equal demand. And also we have to have the additional production facilities. So we have the additional production facilities available for all the three products. We have to have the marketing staff. So we have the equal marketing staff for every product. So like that, all the parameters are equal for all the three products. Apart from this, they have to know the most important piece of information: what is the profit contributed by each of the product. If they know what is the profit contributed by each of the individual product, then they can go for the increase of that product which is earning more profits to the company. So for this information, they cannot use the profit and loss account which is prepared in the FI component, because the P&L account will display the total picture of the company as a whole. The P&L account which we prepare in the financial accounting will show the total profit of the company as a whole. There we cannot distribute the profits according to the product. But here the management wants to know the profits according to products so that they can take a decision of deciding which product they have to increase in the terms of production. For that, the management has to depend on the controlling component only. So in the controlling component, there is one module which is called profit center accounting. So using the profit center accounting, you can bifurcate the profits according to any criteria required by the management. So here what I mean to say is This is the necessity and significance of controlling component. So the main purpose of this controlling component is to provide the information to the management which is necessary for them for the performance analysis and decision making process. That's why this controlling component is called internal reporting tool. And FI is called external reporting tool, because after preparing your P&L account and balance sheet, we have to submit this P&L account and balance sheet to many external legal agencies like banks, stock exchange commission, then income tax authorities, sales tax authorities. Like that, to many external authorities, we have to submit these financial statements. That's why this FI component is called external reporting tool. And CO is called internal reporting tool. So here, this controlling component is always concerned with analysis of expenses and revenues. That's it. This controlling component is always concerned with analysis of expenses and revenues, because here the resources of any company are very much limited. With the limited resources, they want to maximize the profits. For that, we want to analyze the expenses to see where it is possible to reduce the expenditure. By reducing the expenditure, we can maximize the profits. No? Similarly, they want to analyze the revenues to find the ways where it is possible to increase the revenues. So either by increasing the revenues, so they want to analyze the revenues only. That's why either by increasing the revenues or decreasing the expenses, or by both, we can maximize the profits. No? That's why this controlling component is always concerned with analysis of expenses and revenues. And these expenses and revenues are existing where? In the general ledger accounting. So we maintain the expense accounts and the revenue account, GL accounts, in the general ledger accounting only, right? So the general ledger accounting is the base for the controlling. So we don't have anything to do with the balance sheet items. Means we don't have anything to do with the subsidiary ledgers. Accounts payable, account receivable, and asset accounting, they are not necessary. So if you know how to post the transactions in the general ledger, you can understand controlling. So here the expenses and incomes are existing in the general ledger accounting. So how the data is flown into controlling? Here in the financial accounting, we have the general ledger accounting, right? In the general ledger accounting, we maintain the GL accounts for every expense account and for every revenue account. So that is called main ledger, you know, right? So with the general ledger accounting, all the other modules are integrated. If you remember, at the beginning of the general ledger accounting, I told you that the general ledger accounting is called main ledger, and all the other modules of SAP can be and should be integrated with the general ledger. So we integrate all the other modules of SAP with the general ledger. For example, asset accounting is integrated, plant maintenance is integrated, metals management is integrated, sales and distribution is integrated, PPC, HR, like that, all the other modules of SAP are integrated with the general ledger. As a result, and each module is used to process the business transactions in one department. So every day in every department, some expenses are taking place and some revenues are also earned. So whenever the expenses are incurred and revenues are derived, these expenses and revenues are entered by the users of the respective departments in their own departments. As a result of integration, the respective GL accounts of expenses and revenues which are maintained in the general ledger are updated. Means what? The total expenses and revenues of your total company code are available in the general ledger. So from the general ledger, the information is transferred to controlling. This is called data flow. Now, here we have to understand one concept which is called controlling object. Controlling object. It is the entity for which information is maintained in controlling. Means, if you remember, In FI, we have posted expense and revenues for each GL account in the general ledger accounting. In accounts payable, we have posted purchase invoices, part payments made, full payments made, then advance payments, etc., with reference to vendor master record. Then in account receivable, we have processed all the business transactions with reference to customer master record, right? Like that, similarly, in controlling also, there should be something with reference to which we can maintain the information, we can process the information, we can analyze the information. That something is called controlling object. That something is called controlling object. Here, three words are important: maintain information, analyze information, maintain information, process information, analyze information. Maintain, analyze, process, map. So these are the three activities that are very important in the controlling component. Manage the information, analyze the information, manage the information, process the information, analyze the information. Manage, process, analyze. Clear? So these controlling objects were already defined in the system. You cannot maintain your own controlling objects. The controlling objects were already defined in the system, and with reference to one of these controlling objects or with reference to all of the controlling objects, you can maintain, process and analyze the information. So the system maintains the information for each controlling object through primary cost element and secondary cost elements. So what is the primary cost element and secondary cost element? We will discuss later on in the cost element accounting. So what are the controlling objects? So these are the controlling objects which are already available in the SAP R3 system. Number one, cost center. So with reference to cost center, we maintain, process and analyze the information in the cost center accounting. So cost center accounting is one module in controlling. What is cost center? How the information is maintained? We will see later on. Here we are just discussing what are the controlling objects. Then internal order is another controlling object. So with reference to internal order, you maintain the information, you process the information, you analyze the information in the internal order accounting. This is another module. Then cost object. For the cost object, you maintain the information, you process the information, you analyze the information in the product costing module. This is another module. Then profitability segment. So for the profitability segment, you maintain the information in the profitability analysis. This is another module. Then profit center. For the profit centers, the information is maintained in profit center accounting. This is another module. Then projects. For the projects, the information is maintained in project systems. But the project systems is a separate module like FICO. So we are not going to touch the projects or project systems in the controlling. So these are the 5 modules that are available in the controlling. One is cost center accounting, internal order accounting, product costing, profitability analysis, and profit center accounting. So for all these modules, there is one base module which is called cost element accounting. For all these modules, there is one base module which is called cost center accounting. Without cost center accounting, right, these controlling objects or these modules cannot accumulate the information. So these are called controlling objects. Now, the controlling object receives the information from every module. That is the beauty of this controlling. The controlling object receives the information from every module. Like what? Raw material consumption is received from the materials management. So there is one module which is called materials management. So this module is responsible for the procurement activities and the inventory management and material issue activities to production. So whenever the MM is implemented, that is integrated with the FI. So When the material is issued to the production processes, when the material is issued to production, this issue is entered by the MM end user in MM module. Then, through the process of integration, the raw material consumption GL account in FI is automatically updated. So, from the general ledger, the raw material consumption is taken to controlling. Means, what is the original birthplace of this raw material consumption? Materials management. So, from the materials management, the raw material consumption is posted to general ledger. From the general ledger, that is taken to controlling. That's why we say that the raw material consumption is taken from materials management. Not only raw material consumption, all the material management expenses. What are all the expenses which are concerned with proper maintenance of your inventories? And also, you incur some expenses while procuring the raw materials, like inward freight. Then input taxes. Input taxes means the taxes which are paid in the purchases. Input taxes. So all these are transferred from materials management to general ledger. From the general ledger, they will be transferred to controlling component. Then depreciation from asset accounting. So already we have seen that when we execute the depreciation run, right, the depreciation account in the general ledger is updated, right? Means the depreciation is taken from asset accounting into general ledger. From the general ledger, that is transferred to controlling component. Then revenues and sales deductions from the sales and distribution module. Revenue means sales revenue. So when the SD is implemented, that is integrated with SD. So the sales invoice are raised in SD only. When the sales invoice is raised in SD, due to the integration, the sales account in the general ledger is automatically updated. So MM integration, SD integration we will see later on. So the sales GL account in the general ledger is updated. From the general ledger again, it is transferred to controlling. Means what is the original place of this sales revenue? SD. From SD to general ledger to controlling. So controlling from SD to controlling via general ledger. That's how every expenses will be passed on to controlling via general ledger. Then personal cost from human resources accounting. So there is one module in HR which is called payroll accounting. So the user in the HR will execute the payroll every month. He runs the payroll every month. As a result, salaries account, contribution to PF, contribution to ESI and other legal funds, wages accounts are updated in the general ledger. From the general ledger, they are transferred to controlling component. Then production information or production schedule information is taken from production planning and control. Production quantities, raw material inputs, all this information is taken from production planning and control. Then what, like that, majority of the expenses are taken from different modules. Then what is taken from FI, general ledger directly? All the expenses other than we have discussed till now will be posted directly in the general ledger and they will be taken to controlling directly from the general ledger. We have to take care, right? FI consultant has to take care of these integrations in consultation with the respective other consultants. MM integration is done by FI consultant only in consultation with the MM consultant. SD integration is done by FI consultant only in consultation with the SD consultant. Okay, Anil? All the integrations has to be taken care by FI consultant only because he is having the accounting knowledge. So, all the expenses other than the above are called overheads. Overheads are taken from financial accounting. So what is overhead? This is the most confusing concept for everybody. What is overhead? As This is a very confusing concept for many of the people, right? For next half an hour, I will discuss these overheads from the academic point of view. If you understand the concept of overheads, SAP controlling is very easy for us to understand. So from now onwards, one second. Okay, so what is overheads? Let us try to understand. Let us see, Anil, right? You are right, but let us try to understand from the theoretical perspective. Overheads, put heading in the notes, overheads. It is the sum of indirect material cost. It is the sum of indirect material cost, indirect labor cost, and indirect expenses. And indirect expenses. That is the meaning of overheads that everybody knows, right? But the problem is, what is indirect material? What is indirect labor? What is indirect expenses? That is the main problem in deciding, right? Continue. Continue. The following are the main objects of cost accounting. The following are the main objects of cost accounting. Number one, to ascertain the cost, means to find out the cost. Number one, to ascertain the cost. Number two, to control the cost. Number two, to control the cost. To control the cost wherever it is necessary, wherever it is possible, not necessary, wherever it is possible. Wherever it is possible. So what is the controlling the cost? Taking the actions to reduce the expenses. So to reduce the cost of production, that is called second activity, second objective, to control the cost. So the major objectives of the cost accounting component is, see, controlling is nothing but cost accounting. So the major objectives of the cost accounting is, first, to ascertain the cost, to find out the cost. Once the cost is ascertained, we have to analyze whether it is possible to reduce the cost. That is called controlling the cost. So these are the two major objectives. Keeping them in view, let us try to understand what is overheads, right? Now, you take the cost of any product. Broadly, it contains three components: material cost, labor cost, and other expenses. Again, the material cost is divided into direct material cost, indirect material cost. Labor cost is divided into direct labor cost and indirect labor cost. Then other expenses are divided into direct expenses and indirect expenses. So I told you that the total or the sum of indirect material cost, indirect labor cost, and indirect expenses is called overheads. But the thing here we have to understand is what is direct material cost, indirect material cost, what is direct labor cost, indirect labor cost, what is direct expenses and indirect expenses. We have to understand these concepts, and also you have to understand why the cost is to be bifurcated like this. Then only you can understand the concept of overheads. So what is direct material cost? It is the cost of the material which satisfies the following two conditions. It is the cost of the material which satisfies the following two conditions. One is the material should be directly identified with any product or service or department. The material should be directly identified with any product or service or department. Then the cost of that material should occupy the larger portion of the total cost of the product. So any material which satisfies both the conditions, please remember, the material has to satisfy both the conditions. So any material which satisfies these two conditions is called direct material cost. Then indirect material cost. It is the cost of the material which satisfies only one or none of the above two conditions. Means what? Let us take one example. Here, let us take the example of computer table. Computer table, right? So, in order to manufacture the computer table, we require wood. Number two, iron frame. So, I am talking about the traditional computer table, right? Number three, nuts and bolts. So let us assume these are the three materials we are using, materials only, we are using to produce one computer table, right? Now, wood. By measuring the size of the wooden pieces we have used in the manufacture of a computer table, we can say that this much square feet of the wood has been used in the manufacture of this computer table. So, first condition is satisfied. No? The material should be directly identified with any product or service or department, right? First condition is satisfied. Then, the cost of the wood will occupy larger portion of the total cost of the product. For example, if the cost of the computer table is $100, the cost of the wood will occupy minimum to minimum $25 to $30. So it is occupying larger portion of the total cost of the product. So the wood is satisfying both the conditions. So wood is called direct material. And the cost of the wood is called direct material cost. Now coming to iron frame. So by measuring the length of the iron frame, we can say that, okay, this much 4 running feet of iron frame we have used. So first condition is satisfied. Again, if you compare the cost of the iron frame with the total cost of the computer table, it occupies larger portion again. The cost of the iron frame will be at least $20. So it is also occupying larger portion. Both the conditions are satisfied by iron frame. So iron frame is also called direct material, and the cost of the iron frame is direct material cost. Now coming to nuts and bolts. So by just measuring, by just counting physically, we can know that, okay, 10 nuts and bolts have been used in the computer table. First condition is satisfied. But what is the proportion of the cost of the nuts and bolts to the total cost of the product? Very less. Hardly you might have used nuts and bolts worth of $1. But what is the total cost of the product? $100. So when compared to the total cost of the product, when compared to the total cost of the product, the cost of the nuts and bolts is very less. Second condition is not satisfied. So nuts and bolts is called indirect material cost. One more example. Take the shirt, what we wear. The cost of the cloth is direct material cost. The cost of the collar cloth is direct material cost. Cost of the buttons is indirect material cost. Cost of the thread is indirect material cost. Clear? Take the shoes. Cost of the leather is direct material cost. Cost of the sole is direct material cost. Cost of the polish material is indirect material cost. Cost of the lace is indirect material cost. Clear, no? So here, for every material, you have to apply these two conditions. If both the conditions are satisfied, direct material cost. Otherwise, indirect material cost. That's how you have to differentiate between direct material cost and indirect material cost. Till now, I hope it is clear to everybody. If anybody wants me to explain again, I will explain again. Okay, but why? But why we have to differentiate between direct material cost and indirect material cost? That is the important point we have to understand. So here we are doing business in the furniture market. So the furniture market is very, very tough and competitive. So we are producing and selling computer tables. Your competitor has reduced his selling price. So you are also forced to reduce the selling price. Otherwise, you lose your market share to your competitor. So when you reduce the selling price, obviously it will have the negative impact on your profits. So even though you have reduced the selling price, the management wants to see that the profits are not reduced. If the profits are not to be reduced, what are the alternatives available to the company? You have to increase the quantity of the sales, which is just impossible, because already we are operating in the competitive market. It's impossible to increase the quantity. Then what is the other alternate? You have to control the cost. And your cost includes material cost, labor cost, and other expenses. Again, first we concentrate on the material cost first. And the material cost is also contains direct material cost, indirect material cost. So just now we have seen that direct material cost will occupy larger portion of the total cost of the product. And the indirect material cost will occupy smaller portion of the total cost of the product. See, what is the cost of the computer table? $100. What is the cost of the nuts and bolts? $1 or $2. So the indirect material cost will occupy smaller portion of the total cost of the product. In this case, on first on which component you concentrate? First, we have to concentrate on direct material cost, because direct material cost is occupying larger portion. So by just changing the design of the computer table, you will be able to reduce at least a half a feet or quarter feet of wood you require. To that extent, the cost is reduced. But if you concentrate your controlling efforts on the indirect material cost, at the most, you will be able to reduce 1 nut or 2 nuts. If you reduce more than them, it will not stay on the ground. Then what is the cost of 1 nut? It is very, very less than 1 cent. In this case, the cost of analysis is more than the benefit of analysis. That's why at this point of time, the conclusion is, we have to analyze direct material cost. It is not economically feasible to analyze indirect material cost, because individually it occupies smaller portion of the total cost of the product. Clear? That's why material cost has to be divided, or material cost has to be bifurcated into direct material cost and indirect material cost. Now coming to direct labor cost. See, it is the remuneration or salaries paid to the people who actually engaged in the process of production and whose portion will occupy larger portion of the total cost of the product. For example, we have one computer tables manufacturing department, right? And there we are producing computer tables. So we have 10 workers. Each worker is producing one table a day. And for each worker, we are paying $50 as daily wage. Then what is the cost of the labor per table? 50. So it is occupying larger portion of the total cost of the product. And these 10 people are directly engaged in the manufacturing process. These 10 people are putting their hands directly into manufacturing process. Means they are cutting the wooden pieces, they are doing the polishing, they are doing the shaping, and they are bending the iron frame, and within the bent iron frame they are fixing the wooden pieces. Like that, these 10 people are directly putting their hands in the manufacturing process. This is called direct labor cost. Clear? Now, it is the indirect labor cost. It is the remuneration paid to the people who assist in the production. So in order to supervise the work of these 10 workers, we have appointed one departmental supervisor. And for this departmental supervisor, we are paying a salary of $1,000 per month. He is not directly putting his hands in the manufacturing process. He is just supervising. So he is assisting the management to see that the production is carried on smoothly. And here we have 10 workers. Each worker is producing one table a day. What is the output per table? What is the output per day? 10 tables. And we have the 25 working days. 25 working days into 10 tables. What is the total output per month? 250 tables, right? Then we are paying a salary of $1,000 to supervisor. Then what is the proportion of supervisor salary per table? $4, which is very, very less when compared to total cost of the product. So the salary of the supervisor is indirect labor cost. Clear? Now coming to analysis perspective. So the labor cost is bifurcated into direct labor cost and indirect labor cost. So direct labor cost occupies larger portion. So you have to first analyze direct labor cost. After analyzing direct material cost, now you have to come to analysis of direct labor cost, because it is also occupying larger portion. Now in this case, you have to look into the possibility of making 10 people produce 11 tables a day. How to make 10 people produce 11 tables a day? Presently 10 people are producing 10 tables, and for each worker we are paying $100. So total labor cost is $1,000. With the same $1,000 labor cost, if you make these 10 people produce 11 tables, the labor cost per table will be coming down, no? So you have to think in that perspective. In that way, you have to analyze direct labor cost. But indirect labor cost, it is occupying very smaller portion. So it is not economically viable and feasible to analyze indirect labor cost individually. Clear? Then coming to direct expenses. These are the expenses other than material and labor which can be directly identified with the product or service or department. For example, in order to produce this computer table, we require a separate technology, and the technology is not available in the market for the outright purchase. So we have made an agreement with the vendor of the technology to pay $25 per table you produce. That is called royalty. So royalty is the direct expenses. Indirect expenses. All the expenses which cannot be conveniently identified with any product or service or department. For example, printing and stationery, traveling expenses, petrol expenses, diesel expenses. With which product you identify these expenses? No, not possible, right? So these are called indirect expenses. Again, direct expenses occupy larger portion and they are directly identified with the product. So coming to analysis perspective. Direct expense occupies larger portion, so you have to analyze them. Now in this case, you have to bargain with the vendor saying what, sir, this year we have been facing a lot of tough competition, right? It is the question of our survival. We have been paying lakhs of rupees as royalty to you since a number of years. But this year, we are not in a position to survive. So we are restructuring our cost. So as the process, in that process, we are requesting you to reduce at least $1 or $2 as royalty for this year so that we can survive and you also get the royalty from us. If I close our organization, right, the proportion of the royalty which you are getting from our company till now, that also you will lose, no? That's why we are requesting you to reduce $1 or $2 as royalty per table. That's how you can negotiate with the vendor, no? That's why direct expenses are to be analyzed. Basically because they're occupying larger portion. Then indirect expenses, it's not at all possible to identify the product. In that case, how can you control? Printing and stationery, traveling expenses, petrol expenses, diesel expenses. They cannot be apportioned to products. That's why these are called indirect expenses. So it is not feasible to analyze indirect expenses individually. Then what is the conclusion? We have to analyze direct material cost, direct labor cost, direct expenses because they are occupying larger portion. It is not economically viable to analyze indirect material cost, indirect labor cost, indirect expenses individually because individually they are occupying smaller portion. But if you sum up the individual, if you sum up indirect material cost, indirect labor cost, indirect expenses, they become larger portion. No? Now they can be analyzed. So indirect material cost, indirect labor cost, indirect expenses can be analyzed in the summation. In the summarized entity, you can analyze indirect material cost, indirect labor cost, indirect expenses. That sum is called overheads, nothing else. And these overheads are directly posted in FI general ledger and they will be transferred to controlling. Printing and stationery, directly posted in the general ledger. Petrol expenses, directly posted in the general ledger. Traveling expenses, directly posted in the general ledger. So all the overheads are directly posted in the general ledger of FI and from there they will be transferred to controlling component for the analysis purpose. So that is the concept of overheads. And these overheads are classified in many ways. Like the most important classification for the purpose of our cost accounting is functional classification. Functional classification of overheads means administration overheads, factory overheads, sales and distribution overheads, research and development overheads. So this is one way of classification. Another way of classification is behavioral classification of overheads. First one is functional classification. Functional classification is administration overheads, factory overheads, sales and distribution overheads, and research and development overheads. This classification is called functional classification. Another classification is behavioral classification. That is fixed overheads, variable overheads. Whatever may be the quantity of your production, the fixed overheads remains the same in totality, in total. For example, rent. Rent is fixed. See, your installed capacity is 1 lakh and you are paying a rent of $3 lakh. You produce 50,000 units, rent is same in total. You produce 75,000 units, rent is same in total. Even you don't produce anything, you have to pay rent. So the expenses which are fixed in totality, irrespective of your quantity of production, they are called fixed overheads. Variable overheads means they vary in totality in proportion with the quantity of production. If you increase the production, total expenses are increased. If you reduce the production, total expenses are reduced. They are called variable overheads. This is the important two classifications of overheads. With this, we will proceed with the controlling, right? So here, controlling area. This we will discuss in tomorrow's class. Akanksha, you have any questions? Okay. Alok. Okay. Anil. Okay. Gadi. Gadi. Khalid. Okay. Madhusudan. Okay. Prabhi.
No, sir.
Okay. Purushottam. Okay, Gadi. Okay. Tafik. Okay. Teja. Teja. Sorry. So yesterday we have started controlling. So in the controlling, yesterday I have given you the introduction. And today we start with the configuration. Okay, Purushottam. If you see the material, maintain controlling area. So first we have to understand what is controlling area. See, controlling area. It is the organizational unit in controlling for which all the controlling activities are conducted. It is very similar to company code in FI. In financial accounting, we have configured everything in the company code. But in the controlling, we configure everything with reference to controlling area. So from now onwards, we are going to perform some activities, and all these activities will be performed in the one organizational unit. That organizational unit is called controlling area. So at this level, the CO component records, analyzes the overhead related activities, that is cost elements, cost center accounting and internal orders, manufacturing related activities and expenses like product costing, and also analysis and evaluation of activities of internal units, that is profit center accounting. Means all these modules are performed at the controlling area level only. As I said, right, FI organizational unit is company code. CO organizational unit is controlling area. In that way, you can assume. So first we have to maintain the controlling area. Here, there are two scenarios in which we can maintain the controlling areas. Both the scenarios I will explain. Then you can understand which scenario we have to use in the real time. Number one, controlling area same as company code. Means here controlling area same as company code. The enterprise structure for controlling is based on FI enterprise structure. You know the FI enterprise structure, right? Company. On the top, you have the company. Under that, we have the company code. After the company code, we have the business areas. So these are the organizational structure for FI. So in the first scenario, controlling area same as company code, right? The controlling area is maintained at the company code level. The controlling area is maintained at the company code level. Maintaining the controlling area at the company code level means for each company code, you maintain a separate controlling area. Suppose under the company, we have 10 company codes. Then for each company code, we maintain a separate controlling area. Means for 10 company codes, we maintain 10 controlling areas. Means again, we assign the first company code to the first controlling area. We assign second company code to the second controlling area. We assign the third company code to the third controlling area, and so on. This is called controlling area same as company code. Now, we maintain the master records for controlling objects under the controlling area. If you remember, under the company code only, you maintain the master record for customer, vendor, GL account, asset, right? Similarly, in the controlling area, you maintain the master record for each controlling object. Controlling object means cost center is a controlling object. This we have discussed yesterday. Controlling object means the entity for which the expenses are, the entity for which the information of expenses and revenues is maintained, analyzed, and processed. That is called controlling object, right? And these controlling objects were already defined in the system. So controlling objects are cost center, internal order, profit center, right? Then profitability segment, cost object. So for each controlling object, we maintain the master record under the controlling area. Then in the master records of controlling objects, we have to assign the business area. We have to. So in the controlling object master records, we have to assign the business areas. That's how FI organization units and CO organization units are linked with each other. This is called controlling area, same as company code. In this case, we assign a single company code to single controlling area. As a result, the expenses and incomes information of that company code will be taken to respective controlling areas for the analysis purpose. This is what written here. See, in this case, the controlling area is maintained at the company code level. That is, for each company code, we create a separate controlling area. Then, all the expenses and incomes of each company code is taken to the respective controlling areas for analysis purpose. This is one scenario. Then you have the second scenario. Cross company code cost accounting. Cross company code cost accounting means here at the company level we maintain the controlling area. In the previous case, you maintained the controlling area at the company code level, but now in the cross company code cost accounting, you maintain the controlling area at the company level. Maintaining the controlling area at the company level means we assign all the company codes of the company to the same controlling area. You can clearly see the structure there. Controlling area is maintained at the company level means company code 1 and company code 2 is assigned to controlling area. For example, under the company, you have two company codes, company code 1 and company code 2. Both the company codes are assigned to same controlling area. So in the cross company code cost accounting, multiple company codes are assigned to same controlling area. But in the controlling area, same as company code, single company code is assigned to single controlling area. That is the difference. Clear? Then company code 1 is carrying on business in business area 1, business area 2, business area 3. Similarly, company code 2 is carrying on business in 4, 5, 6 business areas. So when you maintain the master record for the controlling objects under the controlling area, again we assign the business areas to controlling object master records. So in this case, in this example, you assign company code 1 and company code 2 to the same controlling area. As a result, the expenses and incomes information of company code 1 and the expense and incomes information of company code 2 are available in the same controlling area, right? As a result, we can compare the expenses of company code 1 with the expense of company code 2. We can compare the revenues of company code 1 with the revenues of company code 2. We can compare, for that matter, we can compare the profits of company code 1 with the profits of company code 2. That is the advantage of cross company code cost accounting. We can do intercompany comparison. See here, this is what written in your material. See, cross company code cost accounting. In this case, controlling area is created at the company level, that is group level. In this case, several company codes are assigned to the same controlling area. Then all the expenses and incomes information of all the company codes will be available in the same controlling area. Then we can compare the expenses and incomes of one company code with the expense and incomes of other company code. That is the feature of this cross company code cost accounting. One second. So to assign several company codes to the same controlling area, some conditions are to be satisfied. You cannot assign just like that. There are some conditions to be satisfied for the purpose of assigning the multiple company codes to the same controlling area. What are those? See, all the company codes should use the same chart of accounts. What is the scenario when all what is the scenario in which all company codes will use the same chart of accounts? When all the company codes are in the same nature of business, then only we can use the same chart of accounts. Then only all the company codes can use the same chart of accounts. So that is one condition you should satisfy. What is the logic behind this condition? For example, you have A company code and B company code. Then both the company codes are in the different nature of business. A company code is in textiles manufacturing. B company code is in, you can say, service industry. In that case, both the company codes will have their own separate chart of accounts. Then you cannot assign both the company codes to the same controlling area, because when the nature of business is different, how can you compare the performance of textile industry company with the service industry company? What is the logic or what is the conclusion you can arrive? Because the nature of business is different. Clear? But both the company codes are in same nature of business and they are using same chart of accounts. Means what? They are in the same nature of business. Both the company codes are in the textiles manufacturing. In that case, if you compare the performance of one company code with the performance of another company code, you arrive some meaningful conclusion. For example, let us assume, right, I am having two batches. One batch is for MM and the other batch is for FICO. So how can I compare the performance of FICO student with MM student? No. Suppose FICO student got the job in 5 months, MM student got the job in 3 months. Then in that case, I cannot say that MM students are efficient, because MM curriculum is very small and FICO curriculum is very large. That is also very correct in real time also. So I cannot compare the performance here. But if I compare two students in the same FICO batch, then I will arrive some meaningful conclusion. Same is the case in the case of cross company code cost accounting. So all the company codes should use the same chart of accounts. Then all the company codes must use the same fiscal year. Means, suppose you have the two company codes. One company code is in India and another company code is in US. So US fiscal year is January to December and Indian fiscal year is April to March. Now, as on 31st December 2017, I want to compare the performance of both the company codes. In that case, for Indian company code, only 9 months are over. But for US company code, 12 months are over. In that case, how can we compare 9 months performance with 1 year performance? That's the reason why all the company codes must use the same fiscal year. Means the number of normal periods should be same. The number of special periods can be different. There is no issue. So all company codes should use the same fiscal year, means the number of normal posting periods should be same, but the number of special periods can be different. The start period and end period of the fiscal year should be same. Means if the fiscal year of one company code starts with April, the fiscal year of another company code also should start with April and they should end with March. Then the start date and the end date of the each period also should be same. So these are the conditions that are to be satisfied if you want to assign multiple company codes to the same controlling area. Now, here in the case of cross company code cost accounting, I told you, we can assign multiple company codes to the same controlling area. For example, we have the company code 1 and company code 2. When we assign company code 1 and company code 2 to the same controlling area, we can compare the performance of company code 1 with the performance of company code 2. In addition to that, In addition to that, we can compare the performance of we can compare the performance of company code 1 with the performance of company code 2. Means at the company code level, you can compare the performance. You can analyze the performance. In addition to that, for example, company code 1 is having 3 departments. Department A, Department B, Department C. In the company code 2, again we have the 3 departments. Department P, Department Q, Department R. In addition to comparing the performance at the company code level, we can compare the performance of Department A of company code 1 with the performance of Department P of company code 2. Similarly, we can compare the performance of Department B of company code 1 with the performance of Department Q of company code 2. Similarly, we can compare the performance of Department C of company code 1 with the performance of Department R of company code 2. At the company code level, you can compare the performance, and at the departmental level also, you can compare the performance. That is the advantage of cross company code cost accounting. So what are the other advantages of cross company code cost accounting? We can reallocate the costs across the company codes. Means you can transfer the expenses from one company code to another company code. Product costing for the products of all the company codes commonly. Means suppose if both the company codes are producing same products, in that case the product costing becomes easy. Then it facilitates group costing. Here group costing means group valuation. If you want to know, suppose you have the 2 company codes, both the company codes in the same nature of business, then you can find out the cost of production at the group level. That is called group costing. Then it facilitates the transfer pricing among the company codes. Means, for example, vertical integration is there. Vertical integration is there. So the finished product of one company code will become the raw material for another company code within the same group. In that case, transfer pricing has to be done. So the transfer pricing becomes easy. So these are the advantages of the cross company code cost accounting. So planning versions we will discuss later on when we start configuration of the respective step. So see the material. Maintain controlling area. SPRO, controlling, general controlling, organization, maintain controlling area. Double click on maintain controlling area. So the data is locked by user Anu and can be displayed only. So you have to unlock the user. So go to SM12. You know how to unlock it. Go to SM12. Give the username by whom the screen was locked. Go to menu lock entry list. Again go to menu lock entry, delete all. SPRO, controlling, general controlling, organization, maintain controlling area. Double click on maintain controlling area. Click on new entries. Controlling area is equal to 3366. So here I am using our same company code name. So in your case also you can use the same your company code name only. Controlling area is equal to 3366. Name is equal to controlling area for 3366. Controlling area for 3366. Now look at the screen. Assignment control. Company code to controlling area. I told you two scenarios, no? If you press on drop down menu, see controlling area same as company code, cross company code, cost accounting. So here we are having only one company code. So I am going to use only controlling area same as company code. Then currency type. Currency type. So currency type means here from now onwards, when we post the business transactions in FI, yes, there was a disturbance from my side for internet for few minutes. I hope everybody can hear me now. Roni, can you hear me? Okay. So first let us log in again. Okay.
Yeah, yes, sir. I'm hearing.
Okay. See, maintain controlling area, SPRO, controlling, general controlling, organization, maintain controlling area. Double click on maintain controlling area. Click on new entries. Controlling area is equal to 3366. Prabhi, Alok and Akanksha. This class company code is 3366. So you can use your company code in your practice. Name is equal to controlling area for 3366. Now, this is called assignment control. Company code to controlling area. If you press on F4, you have the two options. Controlling area same as company code, cross company code, cost accounting. So here I am having only one company code. So we can use only controlling area same as company code. Then currency type. 10 means company code currency. So what is currency type here? From now onwards, when you post a transaction in FI, the controlling is also automatically updated. Please remember, we cannot post manually into controlling. The controlling component is always updated through postings from other modules. So from now onwards, when you post a transaction FI, one FI document is generated, right? That you know. In addition to FI document, from now onwards, a CO document is also posted. So for one posting in FI now, two documents are posted in two modules. One document is in FI, one document is in CO. Means the business transactions are also maintained in CO. In which currency? The business transactions are to be managed in the controlling area. That is called currency type. 10 means company code currency. So the business transactions are also maintained in company code currency only. Write down this point here. You have some space here, no? Again, write down there. The controlling component is always updated. The controlling component is always updated automatically only through postings from other modules. So currency type is equal to 10, company code currency. Currency is equal to USD. In your material, INR is there. If you are doing the practice with Indian company code, keep it as it is. If you are doing the practice with US company code, make it as USD. Chart of accounts 3366. Fiscal year variant K4. Cost center standard hierarchy. I will come. It was not at. We have not yet come to that stage, Chandrasekhar. We have not yet come to that stage. It will come. Then I will explain. No issues, Chandrasekhar. You have the right to ask. No issues. No sorries. Cost center standard hierarchy is equal to 3366 underscore HIR. Cost center standard hierarchy 3366 underscore HIR. So what is the cost center standard hierarchy? Go back to notes, please. Put heading cost center standard hierarchy. Cost center standard hierarchy. It is the arrangement of cost centers. It is the arrangement of cost centers for reporting purpose. It is the arrangement of cost centers for reporting purpose. For reporting purpose. It is mandatory. It is mandatory to define the cost center standard hierarchy. It is mandatory to define the cost center standard hierarchy for the controlling area. For the controlling area. For the controlling area. There can be only one cost center standard hierarchy. There can be only one cost center standard hierarchy per controlling area. So here we have given the cost center standard hierarchy name. We have not yet created the hierarchy. Hierarchy is the arrangement of the objects. Cost center standard hierarchy means arrangement of the cost centers for reporting purpose. What is the arrangement of cost centers? That we will discuss in cost center accounting. Here we are just developing the basic settings, nothing else. Here we have given only the name, right? We did not create the hierarchy. So how the hierarchy is created and how the hierarchy will look alike, we will discuss in the cost center accounting. Click on save. See here, standard hierarchy 3366 underscore HIR does not exist. Should system 3366 underscore HIR be created as standard hierarchy? You have to click yes on the message. Then double click on assignment of company codes. Double click on assignment of company codes. Click on new entries. We have to assign all the company codes here. So we have only one company code. Company code is equal to 3366. Click on save. Then double click on activate components. Click on new entries. Here in this particular screen, we activate whatever the submodules you want to implement in controlling. So unless you activate these components here, you cannot post You cannot implement the submodules. Fiscal year is equal to 2017 or 2018. Now, from this fiscal year, see cost centers. The default setting is component not active. If you keep this as it is, you cannot implement cost center accounting. So if you want to implement cost center accounting, you have to select component active. Then select activity types. Select activity types. Then select component active for order management. Select profit center accounting. Profitability analysis cannot be activated here. It has to be separately activated. So here we have activated 4 modules: cost center accounting, profit center accounting, then internal order accounting and activity types. Click on save. Ignore the message. That's how we have created controlling area. Now, maintain number ranges for controlling documents. I told you, from now onwards, when we post a document in control FI, another corresponding document is automatically posted in controlling. In that case, how to identify the documents in controlling, how the GL documents are identified, how the vendor invoice are identified, how the customer invoice are identified with the number ranges, right? Similarly, in the controlling, in order to identify the business transactions or documents, we have to use the number ranges. So in FI, we will see cross company code cost accounting later on. We create one more company code, then we will see. What I was telling you. So in FI, you have the document types, but in CO, there isn't any document types. Please remember, FI is a legal requirement. FI component is a legal requirement, but the controlling is a management requirement. So you need not follow any legal provisions while maintaining the controlling reports. But there are some company codes which are covered by under section 233B of Companies Act, which will be coming under cost accounting record rules. So those company codes are legally required to maintain the cost accounting records. In that case, right, we have to follow some rules. Otherwise, there is no rule at all in the controlling. Always the purpose of this controlling component is to provide the information to the management. So in the controlling, there is no document types. Path is same as above. Click on back arrow. See, maintain number ranges for controlling documents. Controlling area is equal to 3366. Click on maintain groups. Click on maintain groups. Now, in your material, you do one thing. From here, you strike off all the lines. Click on maintain groups, is there no? After that, from menu group insert, you strike off all the things. You strike off all the 6 lines and start writing down. Click on create button. Click on create button. Group is equal to, click on create button. Group is equal to number ranges for controlling area 3366. Number ranges for controlling area 3366. From number is equal to 1 to number is equal to 1 lakh. Click on save. Click on save. Click enter on the message. Click on back arrow. Sorry, write down. Click enter on the message. Click on back arrow. Keep the cursor on coin process. Keep the cursor on coin process. I will tell you what is this. Keep the cursor on coin process. Click on assign element group. Click on assign element group. Double click on number range number 01. Double click on number range number 01 within brackets. Number ranges for controlling area 3366. Within brackets, number ranges for controlling area 3366. Now, continue. Keep the cursor on RKIU. You can scroll down. I will tell you what are all these things. Keep the cursor on RKIU. Click on assign element group. Click on assign element group. Double click on number range number 01. Double click on number range number 01. Again, keep the cursor on RKP1. Keep the cursor on RKP1. Click on assign element group. Click on assign element group. Double click on number range number 01. Double click on number range number 01. Double click on number range number 01. Continue again. Keep the cursor on RKU1. Keep the cursor on RKU1. Click on assign element group. Double click on number range number 01. Again, keep the cursor on RKU3. Keep the cursor on RKU3. Click on assign element group. Click on assign element group. Double click on number range number 01. Double click on number range number 01. Click on save. Click on save. What is this? Look at the screen, everybody, please. Here, these are the activities. Please remember, look at the screen. These are the activities which you can perform in the controlling. Other than these activities, you cannot do anything in the controlling. So you don't have the document types in FI, but you have the transaction types in controlling. So these are the transactions, or these are the activities you can perform in controlling. So what you have done here, first you have defined the number ranges 1 to 1 lakh, right? Then for that number ranges, we have assigned these activities. So whenever you perform these activities, a CO document is generated, and for that CO document, the system takes the number from this number range. But what is coin process? What is actual word assessment, planning activities, repost costs, repost CO line items? These activities I start explaining from the cost center accounting. Okay, and for the time being, we have selected only 5 activities. So during our CO classes, we are going to select some other activities. This is how we define the number ranges for controlling documents and controlling. Now, see the next step. Maintain versions. What is version? Here, version, see here, it is the set of values for alternative plans. Planning versions, not version, planning version. Planning version means it is the set of values for alternative plans. See, the word version stands for set of values or set of objects. The meaning of the word generally version is set of values, nothing else. SAP ECC 6.0 version, what does it mean? It is set of some functionalities. And SAP ECC 5.0 version, what does it mean? It is also some set of functionalities. But ECC 6.0 is, is something more functionalities. It is having something more functionalities than ECC 5.0. So the basic meaning of, the original meaning of word version is set of values. Now in controlling, the version word has been used with reference to planning. So planning version, it is the set of values for alternate plans. Why we have to take into consideration the alternate plans? As I said, the main purpose of controlling is to analyze the performance. Analyzing the performance means how efficiently our departments are working, how efficiently our company is working. That is called analysis, performance analysis, right? Now, I want to analyze the performance of department A. How can you say that? You know the actual performance. For example, department A expenses for the month of January is $1 million. How can you say whether the department has spent less or more? We don't know. So you cannot analyze performance with the actual data. That's why the actual data has to be compared with the planned data. So in order to enable the effective performance analysis, at the beginning of every accounting year, the management will set the targets for the performance indicators. For that, the top management will ask the planning department to submit the plans for the current year, for the new year, for the 2018, for example. Then, based on some assumptions, the planning department will submit different alternative plans. The values of each of such alternative plan is called version. For example, our installed capacity of production is 2 lakh units. Means in the most ideal circumstances, in the most ideal conditions, using the existing plant and machinery, you will be able to produce 2 lakh number of units. That is called installed capacity of production. So the planning department has submitted 3 alternative plans. One is optimistic plan or plan number 1. Number 2, moderate plan, plan number 2, or pessimistic plan, plan number 3. Optimistic plan means the assumption is everything is going to be favorable for the company in the new year. We are expecting good rains. We are expecting good crops. As a result, sufficient amount of money will be circulated in the hands of the people. As a result, there will be a good demand for our products. That is called optimism. Optimistic thinking. So based on the optimism, right, the planning department has submitted the first plan, optimistic plan. Moderate plan means we are not expecting any changes in the new year also. Pessimistic plan means most worst conditions. If everything is going to be unfavorable to the company, what will happen? So these are the three assumptions we have done. So under the optimistic plan, if everything is going to be favorable to the company, what is the sales quantity you can achieve? 1,60,000 number of units. If it is the moderate plan, last year we have sold 1,40,000 number of units. So this year also we are expecting to sell 1,40,000 number of units. Then pessimistic plan. In the most worst conditions or in the most unfavorable conditions, the company can sell 1,20,000 units. So if you have to sell these units means you have to produce. In order to produce these units, you have to incur expenses, right? Now, material cost at $10 per unit. If you want to produce 1 unit of finished output, we require $10 as material cost. If you have to produce 1,60,000 number of units, 16 lakhs. Under the moderate plan, it is 14 lakhs. Under the pessimistic plan, it is 12 lakhs. Then labor cost at $5 per unit. 8 lakhs under the optimistic plan. Total quantity produced into cost per unit, right? Under moderate plan, 7 lakhs. Under pessimistic plan, it is 6 lakhs. Then other expenses. Optimistic plan, other expenses at 2.50 per unit. 4 lakhs under the optimistic plan. Moderate plan, 3,50,000. Pessimistic plan, 3 lakhs. Rent is a fixed expenditure. Whatever may be the quantity you produce, your factory rent is same. So under each level of production, 3 lakhs is the rent. So this is the yearly plan. The yearly plans are broken down into monthly plans. That is a different issue. Here we are just discussing version. Now, the total cost of production under the optimistic plan is 31 lakhs. Under the moderate plan, the total cost of production is 27,50,000. Under the pessimistic plan, the total cost of production is 24 lakhs. So planning version means the values of alternate plans is called version, right? So this is called one version. This is called another version, version 2. The set of values for alternate plans. This is called another version. So the planning department can submit any number of versions. There isn't any limit. Clear? Now, the management has decided. Chalo, let us go with the plan number 1. Then these will be your targets for the performance analysis. You have to produce and sell 1,60,000 number of units. If you have not been able to sell 1,60,000 number of units, where the wrong has gone? Where is the wrong? That is to be analyzed by the management. So your performance indicator is what? Selling the sales quantity of 1,60,000 number of units. Okay, we have produced and sold 1,60,000 number of units, but your total cost should not be more than 31 lakhs. Again, it also has to be analyzed. If the total cost is more than 31 lakhs, where we have incurred more expenses, what is the cause of incurring more expenditure? This is how to avoid them, how to control them. This is analyzed by the management. Out of 31 lakhs total cost, your material cost should not be more than 6 lakhs. Your labor cost should not be more than 8 lakhs. Your other expenses should not be more than 4 lakhs. And your rent should not be more than 3 lakhs. Like that, every figure will act as performance indicator. So in order to analyze the performance, we require actual data and also planned data. Okay. Now, the actual data is coming from where? From other modules. For example, FI. So when you incur salaries, right? Salaries is posted in F-02, right? So the actual data is coming from FI. Now, whenever you post any actuals, that actuals will be transferred to controlling automatically, and they are stored in the default version. They are stored in the default version. Then the user has to enter the values of the accepted plan in the default version. So in the default version, you have actual values and planned values, right? Then using the actual values and planned values from the default version, the user can prepare the variance reports. Variance reports means the reports showing the differences between actuals and the planned data. In the case of expenses, if the actuals are more than the planned, then we say that we are performing inefficiently. That is called negative variance. These things we'll discuss again in the cost center accounting. So from the default version, the user can draw the variance reports. That's why you have to make one version as a default version for the controlling area. That is the meaning of maintain version. Maintain 0 version as default version for controlling area. So you have to maintain one version as default version for the controlling area. The system defined default version is 0. Generally, as far as the versions are concerned, we don't change the system default settings. So system defined default version is 0. We have to maintain the 0 version also as default version for our controlling area. For our controlling area. Clear? That is the meaning of maintain versions. Path is same as above. Or you can use the transaction code OKEQ. See, select 0, plan or actual version. So 0 version only will contain actuals and planned values. Select 0 version. Double click on settings for each fiscal year. See, version 0 is automatically defaulted here. Controlling area is equal to 3366. Click on enter and save. Fiscal year, click on enter. Click on enter. Click on new entries. It is not there. Please write down. Click on new entries. Fiscal year 2017. Click on save. So these are the basic settings for controlling. FI basic settings you have seen 10 to 12 classes. But controlling area basic settings only 3. So controlling is very simple actually, right? So the volume of configuration is less, but the explanation is more. You have to understand a lot of logic, right? So tomorrow we start with cost element accounting, and day after tomorrow also we have the class. Saturday, Sunday also we have the class this week. So cost element accounting we start tomorrow. And if you have any questions, please ask them tomorrow class. Okay. See, today we have to start controlling cost element accounting. See, what is the purpose of cost element accounting? Using the cost element accounting, we can identify all the expenses and incomes from financial accounting to controlling component for analysis purpose. Here I told you that the controlling component is concerned with analysis of expenses and revenues. And these expenses and revenues are existing in the financial accounting general ledger. So we cannot analyze them as it is there. In order to analyze them, we have to identify them into controlling. So The expenses and revenue accounts are created as cost elements in controlling. So the purpose of cost element accounting is to identify expenses and revenues into controlling for the purpose of analysis. So the cost element accounting is the base module for all other modules in controlling. So what is the cost element here? It is the cost relevant item in the chart of accounts. The cost elements are used to identify all the expenses and incomes from financial accounting and bring them into controlling for analysis purpose. See, cost element is the cost relevant item in the chart of accounts. So here, cost relevant item in the chart of accounts means cost relevant means that item should be taken as part of the total cost of production. Means generally in controlling, every month we find out the total cost of production. As we prepare financial statements every month in FI, in the controlling, in the cost accounting, generally we prepare the cost of, we find out the total cost of production. The cost relevant item means that item should be taken as part of your total cost of production. That is called cost relevant. So it is the cost relevant item in the chart of accounts. What is chart of accounts? Chart of accounts, the list of GL accounts, right? So in our chart of accounts, these are the GL accounts you have created, right? For example, in that case, share capital is a cost relevant item. Means the share capital will be taken as part of the total cost of production? No. Similarly, cash account. Cash account is taken as part of the total cost of production? No. So share capital account and cash account is not cost relevant. So they are not cost element. Salaries is taken as part of the total cost of production. And also, if you increase the salaries, total cost of production is increased. If you decrease the salaries, total cost of production is decreased. So salaries is a cost relevant item, means it is cost element. Then wages is also taken as part of total cost of production. And also if you increase the wages, total cost of production is increased. And if you decrease the wages, total cost of production is decreased. So salaries and wages are cost elements. Interest is a cost element. Based on the same lines, interest is a cost element. Depreciation account is a cost element. Rent account is a cost element. Sundry expense account is a cost element. Plant and machinery. Plant and machinery will be taken as part of the total cost of production? No. So plant and machinery is not cost element. Buildings is not cost element. Land account is not cost element. And accumulated depreciation also is not cost element. Sales account is not, sales account is a revenue account, right? So here the word cost element is used. The word cost element is used to represent revenues also. So sales account also is taken as cost element. Salesman commission is a cost element. Sale of scrap is a cost element. Trade discount is a cost element. So if you notice that rent account, salaries account, wages account, interest account, depreciation account, sale of scrap account, salesman commission account, trade discounts accounts. These are all your cost elements in the previous list. So if you notice that, what are all these things? These are all your profit and loss account items. Profit and loss account items means expenses and revenues. So the expense and revenues only will be created as a cost elements in controlling. That's what I told you in yesterday's class. The the controlling component is always concerned with analysis of expense and revenues. So we don't have anything to do with the balance sheet items. So in the cost element accounting, we create every expense account and revenue account as cost element in controlling. That is exactly what we do in the cost element accounting. See, all the primary cost elements are profit loss account items. What is the primary cost element? I will explain you. The cost elements are used to carry the expense and incomes into controlling for analysis purpose. That is the main function of the cost element. Now, there are two types of cost elements: primary cost elements and secondary cost elements. So what is primary cost element and what is secondary cost element? See, all the cost elements which have the corresponding GL accounts in FI, all the cost elements which have the corresponding GL accounts in FI, and the cost elements to which we can post directly. Example, rent, wages, salaries, traveling expenses, depreciation. So every expense account which have the corresponding GL account in FI is created as primary cost element in CO. And when you have the GL account in FI, we can post directly. No, posting directly means we can use that GL account in F-02 for the purpose of postings. So every cost element which have the corresponding GL account in FI and to which we can post directly is called primary cost element. Then the primary cost elements are used to bring the expense and incomes accounts into controlling. To create a primary cost element in controlling, first they should be created as GL accounts in financial accounting. Means every primary cost element should have a corresponding GL account in FI. Without GL account in FI, we cannot create a primary cost element. If you want to create a primary cost element, first you have to create the GL account in the chart of accounts. Then only we can create the cost element in controlling. That is the meaning of primary cost element. Example, rent to wages, salaries, right? Then general expenses, depreciation, all the GL account, all the expenses GL accounts are called primary cost elements. Then secondary cost element. So the secondary cost elements are just opposite to primary cost elements. At this point of time, we cannot understand exactly what is secondary cost element. I'm just reading out the slide at this point of time. Later on, in the cost center accounting, you can clearly understand what exactly is the secondary cost element meaning. So secondary cost elements, the cost elements which do not have the corresponding GL accounts in FI, the cost elements to which we cannot post directly. So when you are not able, when you don't have the GL accounts in FI, how can you post to them in F-02? So all the cost elements which do not have corresponding GL accounts in FI and to which we cannot post directly, they are called secondary cost elements. The secondary cost elements are created only in controlling. And the secondary cost elements are used to identify the activities within controlling, such as assessment of overhead, settlement of internal audits, etc. So you cannot visualize any point at this point of time. Don't worry about it. But starting from the cost center accounting, you can clearly 100% understand what exactly is the secondary cost element. Then, for the purpose of convenience, all the primary cost elements have been categorized into different categories, which are called primary cost element categories. Similarly, the secondary cost elements are also classified into many ways. They are called secondary cost element categories. So here, in the cost element accounting, we have to maintain the master record for each cost element. Whether it is a secondary cost element or primary cost element, we have to maintain the master record. In the cost element master record, you have to specify the category number. So the category of the cost elements describes the nature of the cost elements. And these cost element categories were already defined in the system. We cannot maintain our own cost element categories. For example, these are the general primary cost elements. Primary cost element categories. Based on the nature of the primary cost elements, SAP has classified all the cost elements as follows. Number 1, general primary cost elements, cost reducing revenues. General primary cost elements, cost reducing revenues. This category is used to identify all the expenses and all the revenues which have the effect of reducing the cost directly from FI to controlling. Means all the expenses like rent, wages, salaries, etc. etc. When we create every expense as primary cost element, generally we use the 01 category. And sometimes there are some revenues which have the direct impact of reducing your cost. They are created as primary cost elements of category number 01. The revenues, please remember, all the expenses and the revenues which have the impact of reducing your cost. So all the expenses means rent to wages, salaries, etc. generally. So generally for all the expenses we use 01. But sometimes there are some revenues which have the direct impact of reducing your cost. For example, sale of scrap, not the sale of asset scrap. not the sale of fixed asset scrap, production scrap. Sometimes what happens is at the end of the production process, some scrap is inevitably generated, right? And sometimes you will be able to sell that scrap. So what is the accounting treatment you give to the sale of production scrap? You reduce the revenue received from the sale of scrap from the total cost of the production process, right? So here what is happening? The sale of scrap is reducing your total cost of production, no? So when you're identifying or when you're creating the sale of scrap account as primary cost element, we use the 0 category. And these numbers we have to remember. Next, 11, revenue elements. This category is used to identify all the incomes into controlling. For example, sales. Sales is the major revenue element which exists in controlling. Then 03, imputed cost elements, percentage method. 04, imputed cost elements, actual is equal target. The categories 03 and 04 are used to create provisions in controlling. Why we create provisions in controlling? In FI, we know that we have to create the provisions for bad and doubtful debt sometimes. And also, at the end of every month, you have to create the provisions for outstanding expenses. We have seen accrual concept of accounting in the general ledger, right? So we are debiting rent account when we are creating outstanding expenses account means what? We are creating provisions for the expenses provided. Similarly, in controlling, we have to create the provisions. Why? I will give you an example to make you understand why you have to create the provisions in controlling. Here, every month, the management is very much interested in finding out the total cost of production. Suppose, for example, if you want to find out the total cost of production of January 2018, what we do? We add all the expenses incurred in the organization in the month of January 2018. That is your total cost of production. If you want to find the cost of production in the month of February, we have to add all the expenses incurred in the month of February. Okay. So in order to find out the cost of production, we add all the expenses incurred in that particular month. Then the cost of production of the current month is compared with the previous month or with the corresponding month of the previous year. The cost of production and the quantity of production is compared with the figures of previous month or with the corresponding period of previous year. So generally we compare with the previous month. Now, here in the month of December, let us say the closing month. In the month of December, which is the closing month, we are paying bonus to all the employees. Here, this is the gratuity bonus. It's not the bonus linked with the production. For example, in the month of December every year, you are paying $120,000 as bonus to all your employees. Now, that bonus is paid in the month of December and that is accounted in FI in the month of December. Then what is the total cost of production? When you find out the total cost of production of the December 2018, the cost of production of December is unduly increased, right? The cost of production of December 2018 is unduly increased. Why so? Because bonus you don't pay every month. The gratuity bonus you are paying only in the month of December. So when you pay bonus to people in the December, that is accounted in December only, and that is taken as part of the cost of production of December. Then whenever the management look at these figures, it may get frightened. Why there is an abnormal increase of cost in the month of December? Getting the point? That's why what we do is, see, why you are actually paying the bonus. It is the sign of showing our recognition to the employee services which they have rendered throughout the year. Because they have worked very well throughout the year, that's why you are paying bonus. That's why in the cost accounting, please remember, in the cost accounting, always we have to consider the realistic information as far as possible. So we are paying the bonus in the month of December towards the recognition of services rendered by the employees throughout the year. That's why what we do in controlling is every month we consider that we are not actually paying. We consider that 10,000 is paid as bonus. Every month, please remember, again I am telling you, in the controlling, every month, you assume that we have paid 10,000 bonus every month, and the 10,000 bonus is taken as part of the total cost of production of that month. So we create a provision in controlling only. So that provision will be going on being accumulated every month, right? On 31st December 2018, what will be the accumulated bonus in controlling? $1,20,000. Then in FI, we actually pay bonus in the month of December, and we actually pay that, in the month of December, we actually pay the bonus of 1,20,000. Then that is accounted in FI, debiting bonus account, crediting cash account. In FI, bonus account is showing debit balance. In CO, provision for bonus account is showing credit balance. Debit is set off with the credit. So with the help of the bonus of provisions in controlling, we can see that the cost of production is uniform every month, and if any abnormal changes are there due to underperformance, these changes can be easily identified, and these changes can be easily eradicated or eliminated, which has led to underperformance. Clear, no? So in order to create the provisions, we use 03 and 04, and these are the two methods of creating provisions in controlling. Then 12, sales deductions. This category is used to identify all the expenses which have the direct effect of reducing the sales revenues. Example, trade discounts, salesman commission and salesman salaries. Here, for your understanding purpose, all the elements which are reflected in the sales invoices and all the expenses which directly reduces our sales revenues will be identified into controlling as primary cost elements with the category number 12. Salesman commission, it affects your sales revenue, no? Trade discount is reduced in the sales invoice, no? So all the expenses which are reflected in the sales invoices and also the expenses which are the direct impact of reducing your revenues, sales revenues, are identified into controlling with the category number 12. Then 22, external settlement cost element. Please remember these numbers, you have to remember. This category is used to settle or apportion or transfer the cost of a controlling object such as internal order to an object outside the controlling component. Example, settlement of cost of a production order to a GL account or finished goods stock account in financial accounting. This category number 22 we will discuss in internal order accounting. So these are the primary cost element categories. Right? Now, here 01, general primary cost elements, right? Then 12, sales deductions. Now, take for example, salesman commission based on turnover. We have one expense account in the FI, salesman commission based on turnover. So this is an expense account and it has to be created as primary cost element in controlling. So at the time of creating this as a primary cost element, we have to give the category number, no? So which category number we give? Basically it is expense, right? Basically it's an expense, right? We can give 01. But it is affecting your sales. So you have to give 12. Which one you give? What is the impact if you give 01 or if you give 12? Are you getting my point? If anybody wants, I will explain again this point. See, salesman commission based on turnover is basically an expenditure, right? So you can give 01, category number 01. Otherwise, it is affecting your sales revenue, no? So you can give 12. Which one you give? What is the impact? That's what I'm going to explain you now, right? Here, if you enter 01, the system will consider this salesman commission based on turnover as a primary cost element, as one among all other cost elements in controlling. But if you enter 12, the system will specifically identify this cost element into controlling, informing you that this is the expenses which are affecting your sales revenues. So try to reduce this expenditure. Try to control this expenditure so that your sales revenues are increased, so that your profits are increased. I will give an example. This month, we have announced one scheme to our sales representatives. So whoever sales representative achieves a turnover of $1 lakh, we are going to give him 1% extra sale incentive in addition to normal salary. So one sales representative has achieved a sales turnover of $1 lakh. So we have given him 1% incentive. He has achieved 1 lakh sales. We have given 1% incentive. What is the net sales contributed by the sales representative? What is the next extra sales contributed by the sales representative? 99,000 only. Now, if you create the salesman commission based on turnover as primary cost element in the category number 12, system takes this expense into controlling specifically and separately, informing you that this is the GL account which has reduced your sales revenue by 1,000. Please think that 1% is too much, Please verify whether 1% incentive may be too much. Try to control this. Okay. Next month, we announced a scheme, right? Again, same scheme, but the percentage incentive is 5%. In that case, one sales representative also has achieved the same turnover 1 lakh. So on 1 lakh, 0.5% incentive you have to give. On 1 lakh, 0.5% means $500. Now what is the net sales contributed by the sales representative? $99,500. In the previous case, when the incentive is 1, net sales contributed is 99,000 only. So an extra 500 you get your profit now. Your profit is increased, That is the use of sales deductions. And also, the sales deductions cost element has the relevance in the profitability analysis also. What is that profitability analysis relevance? We will discuss in the profitability analysis. Now, secondary cost element categories. So we could not understand what exactly is the secondary cost element categories. We could not understand what exactly the secondary cost element itself. So again, we cannot understand what is the secondary cost element categories again. So for the time being, I am reading out again the slides. Okay. So in the cost center accounting, you can clearly understand what is the secondary cost element categories. Don't worry about it. I am there to make you understand. See, 21. Internal settlement cost elements. This category is used to apportion the cost of internal orders to the cost centers and other controlling objects. Then 41. Overhead cost elements. This category is used to apportion the overheads based on the functional classification. That is administration overheads, factory overheads, sales and distribution overheads, and research and development overheads. Then assessment cost element 42. This category is used to apportion the cost of the service cost centers to the production cost centers. Then allocation cost element 43. This category is used to allocate the overheads based on the activity quantities in the cost center accounting. So these are the secondary cost element categories. This again I will explain at the time of cost center accounting. So in the cost element accounting, what we do, we create the master records for all the primary cost elements and secondary cost elements. Secondary cost element we will see later on. At this point of time in our class, we have to create primary cost elements. See, all these notes I have given here. So the primary cost elements can be created in the following ways. Number one, from financial accounting. Number two, in the controlling component directly. Number three, automatic creation of primary cost elements. Right? This we will see in the next class. Today I have to go outside on a little bit some urgent work. So tomorrow also we have the class. Tomorrow, even though it's a Saturday in US and Sunday in India, we have the class tomorrow. Tomorrow and day after tomorrow also we have the class. Akanksha, you have any questions? Akila? Alok? Anil? Okay, Akila. Anil? Okay, Alok. Okay, Anil. Gadi?
Hello,
Yeah, Gadi.
sir. Can you give me one more example for 01 category? You have given one example for category 12,
Okay.
sales deduction. It's a salesman commission.
Okay.
Which one we can consider in category 1?
All the expenses normally, salaries, wages, right? Loss on sale of asset, right? Then depreciation. So generally, all the expenses will be considered as 0. But the expenses which are specifically affecting your sales revenues will be considered as 12.
Then why you have mentioned in the category 1 itself, sir, both cost reducing
I did
elements?
not mention, Mr. Gadi. What I told you is later on when you're going through the notes, you may get the doubt that basically salesman commission is an expense, no? So why can't we give 0, 1? Why you have to give 12? If you get this doubt in future, you may not be able to reach me in future, right? You may not be in touch with me. Then who will clarify your doubt? Keeping that in view,
Okay.
I have simulated the doubt on myself itself. I explained that. Got my point?
Okay.
I never
Yes,
said that
yes, sir.
for salesman commission, we have to take 0, 1. I am not saying that. I am saying you, if you take 0, 1, what is the impact? If you take 12, what is the impact?
Sir, in point category 01, you have mentioned that you just open it, sir, the slide.
Yeah.
Yeah, general primary cost elements or cost reducing revenues.
Okay.
What is this, sir? The second one, cost reducing revenues.
See, you have to understand in this way. Cost reducing revenues means you have to interpret like this. Revenues which reduces your cost. Revenues which reduce your cost. For example, you have the production process. Sale of scrap is only the example generally. You have the production process. At the end of the production process, some scrap is inevitably generated. Right? Now,
Yes, sir.
sometimes you will be able to sell the scrap. You get some revenue. What do you do with that revenue? I mean, what is the accounting effect or accounting treatment you give to the sale of scrap revenue? Here I'm talking about sale of production scrap only, not sale of the asset scrap.
Okay.
Production scrap. you get some revenue. You reduce that scrap from the total cost of the production, right? Yes or no?
Yes, sir.
So when you are identifying this type of revenues into controlling, we identify them with 01.
Okay. Okay.
See, for understanding controlling, a little bit of cost accounting knowledge is necessary. Not the whole knowledge,
Yes.
a little bit.
Yeah. You got it, sir. For
Okay.
this only I got confused.
Okay.
Thank
Jerisha,
you, sir.
you have any questions? Okay. Chandrasekhar, Prabhi. Okay. Please remember, tomorrow also we have the class at same time. Please attend. Okay, then see you tomorrow same time. Okay, Chandrasekhar. Okay. So we are in controlling. So in controlling, in the previous class, I explained the cost element accounting theoretical part. So today we start how to create cost elements in the cost element accounting. So in the cost element accounting, we create the master records for both the primary cost elements and secondary cost elements. So at this point of time, we will see how to create the master records for the primary cost elements. The secondary cost element master records are created later on in the cost center accounting. So in the theoretical part, I told you that, let us go there. See, the primary cost elements can be created in the following ways. From financial accounting. Means from the financial accounting, we can create every expense account and revenue account as primary cost element. That is one method. Number two, in the controlling component only. So directly you can create a primary cost element in the controlling. The third method is automatic creation of primary cost elements. So I am going to show you all these three methods. So first method is from financial accounting. Let us see how to create the primary cost element from financial accounting. See the step number one. Creation of cost element from FI. Transaction code FS00. So FS00 is to create your GL account master record, right? So with the same transaction code, we can create a primary cost element. So we have salaries, wages, rent account, etc. in our company code, right? I mean, in our chart of accounts. So I am creating the salaries account as primary cost element. GL account is equal to 4,100,000. Company code 3355. Go to menu GL account change. Click on edit cost element. See, the short text and long text of the GL account was taken as name and description, and the GL account number was taken as cost element number. That's why I told you every primary cost element will have a corresponding GL account in FI. Okay. Sorry. Company code 3366. I'm sorry. GL account 4,100,000. Company code 3366. 3355 is another class company code. Company code is equal to 3366. Go to menu GL account change. Click on edit cost element. See, the GL account number was taken as cost element number. Valid from 1/1/2018. Sorry for the interruption. I'm feeling very heavy cold. Valid from 1/1/2018 to 31st December 9,999. Click on enter. See, The short text and long text of the GL account number was taken as the name and description of the GL account number. Cost element. The short text and long text of the GL account was taken as the name and description of the cost element. If necessary, we can change it here also. Means the primary cost element should have a corresponding GL account number in FI, but the name can be different. Cost element category. If you press on F4, see, these are the 6 cost element categories I explained in the previous class. Generally, for every expense account, we use one. Primary cost element and cost reducing revenues. Click on save. So in this way, we can create a GL account as primary cost element from FI itself. See the second method. Creation of cost element from CO. Transaction code KA01. Transaction code KA01. We have the wages account also, right? So wages account I am creating as a primary cost element. What is the GL account number of wages account? 4,200,000. Cost element is equal to 4,200,000. Valid from 1/1/2018 to 31st December 9,999. Click on enter. Cost element category 01. Click on save. So we have the rent account also, right? So let us create rent account also as primary cost element. Even though it is not there in the material, let us create the rent account also as primary cost element. So the rent GL account is 4,300,000, right? So cost element is equal to 4,300,000. Valid from 1/1/2018 to 31st December 9,999. Click on enter. Cost element category 01. Please remember, generally for every expense account, we enter 01 only. Click on save. Here, in the previous class, I told you one point. In order to create the primary cost element in controlling, first it has to be created as a GL account in FI. So without corresponding GL account in FI, we cannot create the primary cost element in CO. See, for example, we don't have any GL account number with the 4,312,000 in our chart of accounts. We don't have any GL account number with the 4,312,000 in the chart of accounts. Now let us try to create the cost element of 4,312,000. Let us see what happens. See, create the GL account 4,312,000 first. So without corresponding GL account in FI, we cannot create a primary cost element in CO. Now, I hope it is clear for everybody. So automatic creation of primary cost elements. What is this? See, using this function, we can create a range or group of GL accounts as primary cost elements at a time. Means here, let us take one scenario. Your client has implemented FI last year. So in FI chart of accounts, they have 1,000 expense accounts. Now this year they are implementing CO. So for the controlling purpose, we need to create all the 1,000 expenses GL accounts as primary cost elements. Right? Now, in order to, according to two methods I shown you till now, we have to use the transaction code either FS00 or KA01 1,000 times. It's very laborious work. And also it may take a lot of time. And also there are chances that we might have missed to create some of the expenses GL accounts as primary cost elements. That's why SAP has given one more method. SAP has given one more method that is called automatic creation of primary cost elements. So using this function, we can create a range or group of GL accounts as primary cost elements at a time. Let us see that. Clear? Automatic generation of cost elements. Transaction code OKB2. Otherwise, you can see the path. Chart of accounts is equal to 3366. Click on enter. Click on new entries. Account from. Our expense account starts from 4 lakhs, right? So accounts from 4 lakhs. Account to 4 lakhs 599. Cost element category 01. Cost element category 01. Click on save. Now see the next step. Create batch input session. So you know that batch input session is a group of similar items for processing purpose, right? So we are going to create a batch input which includes 1000 expense accounts to be created as primary cost element category. Transaction code OKB3. Controlling area is equal to 3366. Valid from 1/1/2018 to 31st December 9999. Just 1 second, please. Yes, please give me 2 minutes, please. Yes, I am back. I'm sorry. So controlling area is creation of batch input session to create cost elements. Controlling area is equal to 3366 valid from 1/1/2016 to valid to 31st December 9,999. Session name is equal to session name is equal to username or any name. Batch input user is equal to username. Click on execute. Look at the screen. These are the GL accounts you have created, right? So these cost elements are created by processing batch input session Lakshman in the controlling area 3366 for the validity period from 1/1/2018 to 31st December 9,999. So here only batch input session is created. So we have to execute batch input session. See, execute batch input session, transaction code SM35. Select the session, click on execute process. Same procedure. You know how to execute the batch input session. Select display errors only, click on process. See here, cost element 4,100,000. Cost element already exists from 1/1/2018 to 31st December 9,999. Already we have created this 4,100,000 as primary cost element. No? That's why it is giving the error message. In that case, click on exit button. See, you are exiting the transaction in batch input. Do you still want to keep the batch input session data? You have to click yes. Again, 4,200,000 also was created as primary cost element. So again it is giving the error message. Click on exit button again. Click yes on the message. 4,300,000 also was created as primary cost element already, right? So click on exit button. Click yes. See, processing of batch input session completed. Then click exit batch input. Now all the expenses GL accounts are created as primary cost elements. So where we can display the primary cost elements? If you go to KA23, we can display all the primary cost element. But if you want to display single cost element, KA03, KA01 create, KA02 change, KA03 display. So in KA03, we can display only single cost element. See, for example, KA03. So you can give only one number. But if you want to display all the cost elements, we have to go to KA23. See, cost element 4,500,000 to 4,599,000. I want to display all the cost elements. Click on execute. See, sorry, 4 lakhs. 4 lakhs to 4,599,000. See, these are all the cost elements you have created. Clear, no? Now, here I have shown you automatic creation of primary cost elements at the time of implementation. Okay, we have implemented FI. Last year, we have implemented FI. This year, we are implementing CO. So, your client is having 1,000 expenses GL accounts. So, using the automatic creation of primary cost elements, we have created all the 1,000 expense accounts as primary cost elements. Now, the implementation is over. Today, we have started using SAP, no issues. But today, FI end user has created one expense account. Then that new expense account also has to be created as primary cost element. For that, what we do generally is, suppose for I am an accounts officer, right? I created a new GL account, traveling expense account in FI. Now, I will inform the CO end user with the GL account number and name. Then the CO end user, using the transaction code KA01, he can create the traveling expense account as primary cost element. I hope it's clear for everybody. But again, we can do one more setting. Instead of creating the every expense account as primary cost element manually, we have the automatic creation of primary cost element. Means again, this is from the end user point of view. See, today I create one expense GL account in FI. Then it is automatically converted as primary cost element. I need not inform CO end user. So when I create the GL account in FI expense account, when I create the expenses GL account, it is automatically created as primary cost element. I hope you are following that. When you create expenses GL account in FI, it is automatically created as primary cost element. So where it is done? Here, look at the screen. We don't have any traveling expenses primary cost element here, right? Now, I am doing one setting. You know, you have defined your chart of accounts, right? Financial accounting, general ledger accounting, GL accounts, master data, preparations, edit chart of accounts list. So in this transaction code, you have created your chart of accounts. Go to the same transaction code, click on position, chart of accounts 3366, click on enter. Select your chart of accounts 3366, click on execute. So this is our chart of accounts, right? Look at the screen, integration, controlling integration. Here, manual creation of cost elements is there. So when you, with the help of this selection, when you create the expenses GL account, that has to be converted as a primary cost element manually. But you have another option here, automatic creation of cost elements. So you select automatic creation of cost elements and click on save. So from now onwards, when you create expenses GL account, the system automatically creates it as primary cost element. See, I am creating traveling expense account. GL account is 4,125,000. Traveling expenses. Okay, let us take administration cost. 4,325,000. Company code 3366. Go to menu GL account, create. Account group is administration cost. Select P&L statement account. Short text is equal to traveling expense account. GL account long text is also traveling expense account. Go to control data tab. Account currency USD. Select only balances local currency. Select line item display. Sort key 001. Go to create bank interest tab. Field status group G001. Click on save. Now it should have been created as primary cost element, right? If you go to KA23, we can see the list of all the primary cost elements. See, 4,325,000 traveling expenses. This is another method of creating your primary cost elements. Clear, no? Now, maintenance of field status group for making cost center mandatory. Here, after cost element accounting, our first main module is cost center accounting. For the purpose of cost center accounting, when any expense is posted, that expense has to be identified with the respect to cost center. For that purpose, we have to select the cost center as required entry in the field status group. Here in FI, we wanted to prepare the business area financial statements. We wanted to prepare the business area financial statements. For that purpose, what we have done? We have selected business area as required entry. Similarly, for the purpose of cost center accounting, in order to post the expenses to the cost centers, the cost center should be made as required entry field. That is done in the field status variant. Clear? So, maintenance of field status group for making cost center mandatory. Transaction code OBC4. Select the field status variant 3366. Select the field status variant 3366. Double click on field status groups. Double click on G004. Double click on general data. Select text as a required entry. Click on save. Then double click on G004. Double click on additional account assignments. Select cost center as required entry and business area as required entry. And write one more point. Select optional entry. Select optional entry against partner business area. Select optional entry against partner business area. Click on save. Okay. So here in the field status group 3366, we have selected business area, text and cost center as required entries. So the business and text are required entries as per the financial accounting requirement. Right? Now the cost center is a required entry according to cost center accounting requirements. Clear? Now look at the screen. I am going to show you one more point. Here we have selected cost center as required entry in the field status group G004, right? But in the field status group G001 also we have the cost center, no? See, in the field status group G001 also we have the cost center, right? So why can't we select here as required? Why you have to go to G004 and why you have to select their cost center as required entry? I will tell you. Here, if you select cost center as required entry in the field status group G001, this G001 was already assigned in the cash account, inventory of raw material account, etc., etc. So if you select a required entry for cost center as required entry in the G001, that was already assigned in the cash account and inventory of raw material account. As a result, when you are posting to cash account and inventory of raw material account also, the system will ask for the cost center. But cost center can be accepted only for the cost element. But cash account and inventory of raw material accounts are not your cost elements. They are balance sheet items. That's why you cannot select required entry for cost center in the G001. Clear? Now, see the next step. Assign the new field status group in the GL master. Transaction code FS00. So in all the GL account master records, which we have created as primary cost element, you have to change the field status group to G004. Previously in FI, we have assigned G001. No? Now you have to change it to G004. GL account is equal to 4,100,000. Company code 3366. Go to menu GL account change. Go to create bank interest tab. Field status group G004. Click on save. Then we have created 4,200,000 also as primary cost element, right? So GL account is 4,200,000, company code 3366. Go to menu GL account change. Go to menu GL account change. Go to create bank interest tab, field status group G004. Click on save. So we have created rent account also as primary cost element. So even though it is not there in the material, we have to change it in the rent account also. GL account is 4,300,000, company code 3366. Go to menu GL account change. Go to create bank interest tab, field status group G004. Now the same scenario. Your client has implemented a FI last year, wherein they are using 1,000 expenses GL accounts. So this year we have started implementing CO. So for the purpose of CO, all the 1,000 expense accounts are to be created as primary cost elements. So using the automatic creation of primary cost elements, we have created all 1,000 expenses GL accounts as primary cost elements now. But in every GL account master record, we have to change the field status group. No? So again, we have to execute the change function of FS00 on 1,000 expense accounts. Again, it may take a lot of time. That's why in 1,000 GL accounts, in SAP, we have the provision, we have the facility to make the changes to a group of GL accounts at a time. So using this function, we can change the field status group in all the 1,000 expenses GL accounts at a time. How? This is the procedure. See, mass maintenance of GL account master records. So using this function, we can edit the changeable fields in the master records of a group of GL accounts. Why I have used changeable fields? Because you know that in the GL account master records, we cannot change all the fields. We cannot change GL account master record number, we cannot change a company code, we cannot change account group, and we cannot change operator management status. Except these 4 fields, we can edit anything, right? That's why here I given the wording changeable. We have the separate transaction codes for editing the fields in the chart of account segment, company code segment, and descriptions, short text and long text, right? So here, I need to change field status group, right? So the field status group is there in the company code segment. So in order to change the field status group, we have to go to the path like this. See, to change the field in the company code segment. Example, field status group in the group of GL account master records. Path, accounting. So it is the end user activity. Path is accounting, financial accounting, general ledger, master records, GL accounts, collective processing, company code data, OB underscore GLACC12. See here, please note that many objects can be changed simultaneously in the mass maintenance. When you save your changes, the system checks them for the consistency. They then take immediate effect for all the objects chosen. For this reason, please proceed carefully. Just to read the message and ignore it. Company code is equal to 3366. GL account is equal to 4 lakhs to 4 lakh 599. GL account is equal to 4 lakhs to 4 lakh 599. Click on execute. See, the system is displaying all the GL accounts here. Here, we have changed the field status group manually to salaries account, wages account, and rent account. Right? Now you can change them here. One by one, you can change. See, I changed the field status group to other expenses accounts. Click on Save. See again, you want to save your changes. They will take immediate effect for all object chosen. This action cannot be undone. Ignore the message. See, all the GL account master records have been changed now. No, they won't be extracted, right? From now onwards, whatever the transaction you post from now onwards will be posted to respective cost centers. Chandrasekhar. So with this, our cost element accounting is over. See how simple is the cost element accounting. Now we have the cost center accounting. So the explaining, previous data. No, for the previous data, right, will not be affected. The previous data will not be posted to cost centers. Okay, Chandrasekhar, are you clear? Previous data will not be changed. Yeah, you can extract the previous data, but without cost centers. You can extract the previous data, but without cost centers. Okay. So cost center accounting. So from now onwards, it is the real modules. So whatever the settings you have done till now, they can assume them as basic settings for controlling. If you miss any of those settings, we cannot start cost center accounting. But this cost center accounting, I will explain tomorrow because it takes, the explanation itself will take nearly 1 hour for the cost center accounting, right? So that we will see in tomorrow's class. Akanksha, you have any questions? Akila? Okay. Alok, it seems that you came late, Alok. Okay, no problem. I will send you the recording. Okay, Tejaswani. Anil? Okay. Gadi? Okay. Himasaileja? Okay. Madhusudan? Okay. Madhusudan. Manju?
No question, sir.
Okay. Chandrasekhar? Ready? Purushottam? Okay. Roni? Okay then. See you tomorrow same time. Good night and good day.
ಇವತ್ತು ಜಲ್ದಿ ಮುಗೀತು ಅಷ್ಟೇ.
Yeah, what is the message you are getting, Roni?
ಅದೇ ಈಗ ಹೇಳ್ತೀನಿ ತಾಳು.
Okay, I will reset your password. Okay, I will send you the mail. Within 2 minutes, I will send you the mail.
Sir, still no, my SAP having some problem. Yesterday I called you, right?
Yeah, Manju. Yeah, I will also send you the mail within 2 minutes.
Yeah, thank you, sir.
Okay. So today we have to start the cost center accounting in the controlling. See, cost center accounting. So first I will explain the concept and functions available in the cost center accounting. See, this component is also called overhead cost accounting. Using this component, we can find the origin of the cost, that is, which department or which group of people or which group of machines or which manufacturing process or phase of manufacturing process here of which manufacturing process or phase of manufacturing process is responsible for the cost. Here I told you that the main purpose of this cost accounting is to control the cost, to find the cost. So anyhow you find the cost. After finding out the cost, you have to try to control them. So if you want to try to control them, first of all, you should know where exactly the expenditure is incurred. If you don't know the origin of the expenditure, how can you take the remedies to control it? That's why, basically, with the help of this cost center accounting, we can find the origin of the cost, where exactly in the organization you have incurred the cost. Means in the organization, you have the plants, you have the business areas, you have the departments, you have the manufacturing processes. So every department, every business area, every manufacturing plant will be incurring some expenses, right? In that case, if you know the origin of the expense, where exactly the expense has been incurred, you can try to control them. So using this cost center accounting, we can find out the origin of the cost, where exactly the organization has incurred the particular expenditure. See, for example, the basic difference between financial accounting and cost accounting is that when you're accounting for expenses, in financial accounting, always we consider so in FI, always we consider the nature of expenditure, but in CO, always we consider purpose of expenditure. So this is the basic difference between FI and CO when you're accounting for expenses. For example, we have Department A. Department A. We have paid the salaries of Department A people 10,000. For the Department B people, we have paid the salaries of 20,000. Again, for Department C people, you have paid the salaries of 30,000. Now, what is your salaries? What is the total amount of salaries? 60,000. So, today we paid salaries for Department A people. Then we have to account it for in FI and CO, right? Now, while accounting for this Department A salaries in the financial accounting, what is the nature of this 10,000 salaries? So you debit the salaries, you create the cash account. But in CO, in the cost accounting, what is the purpose of this expenditure? This is the purpose of Department A. So the same 10,000 is taken as part of Department A cost. Let us assume Department A is factory department, right? In that case, this 10,000 is taken as part of factory cost. Now, you have paid Department B salaries 20,000. Department B is administration department. So when you account for expenses in FI, what is the nature of this expenditure? Salaries. So the salaries account is debited in FI. But what is the purpose of this 20,000 salaries? Administration department. For example, in that case, the same 20,000 will be taken as part of administration cost. Then you have paid salaries of 30,000 to the sales and distribution department. In that case, based on the nature of expenditure, the 30,000 will be taken as part of sales. This 30,000 will be taken as See, we have paid salaries of 30,000 to the Department C, and the Department C is sales and distribution department. So when you're accounting for this expenditure in FI, we consider nature, right? What is the nature of expenditure? Salaries. So salaries account is debited, right? Then in controlling, what is the purpose of the salaries? Sales and distribution department, right? In that case, the same 30,000 will be taken as part of sales and distribution cost. Clear? So with the help of this cost center accounting, what is your total salaries now? 60,000, right? Out of this 60,000, we can know that 10,000 was incurred in Department A. Means department is responsible for incurring 10,000 salaries. 20,000 was incurred in Department B. That means Department D is responsible for incurring salaries of 20,000. Department C, 30,000 was incurred in the Department C. In that case, Department C is responsible for incurring 30,000 salaries cost. This is how we can find out the origin of the every expenditure. I hope it is clear till now. Now, in the cost center accounting, what exactly we do is, you define number of cost centers based on the client information system requirements. Then we do some settings in the cost element accounting, because of which at the time of posting any expenditure, the user has to enter the respective cost center. So that will be posted to the respective cost centers, and that expenditure is called actual expenditure for that cost center. Then using the planning function, we can enter the planned values. For every expenditure of every cost center. So for every cost center, you have actual values and the planned values, right? Then for every cost center, we can generate the variance reports using the actual values and planned values. And these variance reports are analyzed by the user to analyze their performance. This is exactly what we do in the cost center accounting. So the CO consultant job ends by seeing generated the reports in the cost center accounting whenever they are necessary. Clear? That is exactly the configuration you have to develop in the cost center accounting. But here the major question is, how do we decide how many number of cost centers you have to create? See, this explanation I have given here. See, cost center, it is the area of activity or area of responsibility for which the costs are incurred. Generally, the departments and organization can be taken as cost centers. During the process of implementation, we divide the enterprise into different cost centers based on requirements of the organization. With the configuration we make in the cost center accounting, in the cost element accounting, when we post any cost element in the general ledger of financial accounting, the expenditure is identified in the relevant cost centers. So with the help of the configuration we did in the cost element accounting, what is the configuration you have done in the cost element accounting? In the cost element accounting, we have created every expense account as a primary cost element. Then we changed the field status group to G004 in the GL account master record, which was created as primary cost element. And in the field status group G004, we have selected cost center as required entry in addition to business and text. So at the time of posting the expenses, it is mandatory to enter the cost center. Clear? So the user has to enter the cost center. So that is the configuration you have done in the cost element accounting. So cost center is the area of activity or responsibility for which costs are incurred. See, in the reality, generally what happens is, every department of an organization can be created as a cost center, but sometimes you may have to decide in some other way. For example, the main question here is, how do we decide how many number of cost centers you have to create in your client company? 50 cost centers or 100 cost centers or 500 cost centers? How do we decide? How do we decide? For that, see, it is not just creating the cost center master record. It is the question of deciding how many number of cost center master records you have to create. For that, we can use some help from SAP company. It said that the cost centers can be created on the basis of one or more of the following criteria. Allocation criteria. Allocation criteria means, or allocation requirement. Allocation criteria or allocation requirement means, here to which point of the organization you want to allocate the particular expenditure. Based on this criteria, every service activity can be created as one cost center. Every production activity can be created as one cost center. Allocation criteria. Then physical location. Physical location means business areas. Suppose you have the Washington business area, New York business area. In the Washington business area, you have the administration cost center and in the Washington business area, you have the administration department and factory department. Then in the New York business area, you have the administration department and sales department. In that case, administration department of Washington business area is created as one cost center. Factory department of Washington business area is created as another cost center, and administration department of New York business area and sales department of New York business area will be created as two cost centers again. But here in the New York business area and Washington business area, you have the administration cost center. So how the system differentiate between these two cost centers? Which administration cost center is related to Washington business area and which administration cost center is related to New York business area? At the time of creating the cost centers, we assign the business areas. If you remember, at the time of explaining the enterprise structure, in every controlling object master records, I said we have to assign the business areas, right? So with the help of the business area assignment, the system can differentiate among the business areas with the help of the business area entered in their master records. One second, please. So with the help of the business areas being entered in the cost center master records, the system can differentiate between the business cost centers. Then functional requirements. Functional requirement means finance function, administration function, sales function, manufacturing function, HR function, like that. So in order to look after these functions, we have a separate departments, right? Finance department, HR department, administration department, sales department, etc. So based on the functional requirements, we can create the cost centers. Means here, each department can be created as one cost center. The finance department can be created as one cost center. The administration department can be created as one cost center. And HR department can be created as a cost center, one cost center, like that. Clear? Then responsibility for costs. So how do you want to fix the responsibility for the costs? Means, for example, here we have 10 plant and machineries. Like that, we have 10 plant and machineries. Now, the management wants to know, and one more thing is, when you have 10 plant and machineries, every month you carry on the maintenance function on these 10 plant and machineries to keep them in good working condition. So, when you carry on the maintenance function on any plant and machinery in FI, which account you debit? What is the nature of this expenditure? Repairs and maintenance, right? So, the repairs and maintenance account is debited in the financial accounting. But the management wants to know what is the cost of repairs and maintenance every month on every plant and machinery. In that case, we have to create each plant and machinery as one cost center. So 10 plant and machineries will be created as 10 cost centers. Suppose, for example, you have carried out 1,50,000 total repairs and maintenance in the month of January. When you create each plant and machinery as a cost center, you can know that for plant and machine number 10, 20,000 is the repairs and maintenance cost. Means you can say that out of 1,50,000 total repairs and maintenance cost, the plant and machine number 10 is responsible for incurring a repairs and maintenance cost of 20,000. You can come to know that plant and machine number 2 we have incurred 10,000. In that case, you can say that plant and machine number 2 is responsible for incurring a repairs and maintenance cost of 10,000. So based on the responsibility, how do you want to fix the responsibility? Based on that also, you can create your cost centers. So here, we can use one or more of this criteria to create the cost centers. Right? Now, based on the above criteria, a department or a group of people or a group of missions or a manufacturing process, a phase of manufacturing process can be created as a cost center. So what is the manufacturing process or phase of manufacturing process? You know, department, group of people, group of missions, etc., etc. But what is the manufacturing process or phase of manufacturing process can be created as cost center? Let us take one example. Again, so here in my domain, I work in a spinning mill in Salem, India. So in the spinning mill, the finished product is called yarn. So it is the industrial name of thread, nothing else. The yarn is the raw material for the weaving mills. So in the spinning mill, the production, the final product is yarn, right? Now, in order to manufacture this yarn, we have different processes. Number one, blow room. Number two, carding. Number three, simplex. Number four, reeling. Number five, primary packing. Primary packing. Okay. So this is the total manufacturing process. Total manufacturing process is this. So if you create the total manufacturing process, you can find out the total cost of production for the total manufacturing process. So for that purpose, you don't require the cost center accounting. If you add all the expenses incurred in FI, that will be your total cost of production, right? So this is not the details required by the management. Then here, the management wants to know what is the total cost every month in the blow room process, what is the total cost in the carding process, what is the total cost in the simplex process, what is the reeling cost in the reeling process, and what is the total cost in the primary packing process. In that case, a blow room is created as one cost center, carding is created as one cost center, simplex, reeling, primary packing, they are created as different cost centers, separate cost centers. Means you have to create 5 cost centers. In that case, for each cost center, you can find the cost. For each phase of process, the total one is called manufacturing process. Blow room is called one phase of manufacturing process. Carding is called one phase of manufacturing process. In that case, if you create each phase of manufacturing process as a cost center, then for each phase, we can find the cost. Clear, no? So in that case, 5 cost centers will be created. Even this is not required in the real time. The management still wants the details. The management still wants the details. Like what? For example, in order to carry in the blow room process, we have 50 blow rooms. We have 50 blow rooms. See, actually, Blow room is a process wherein the dust in the raw material which we use for yarn manufacturing are separated. See, for the yarn manufacturing, the raw material is called lint. The raw material is called lint. So lint means the raw cotton which is separated from the seed. You know the cotton, right? Cotton contains the fiber and seeds. Okay. So here the raw cotton is grown on the farming lands. So this raw cotton is grown on the unorganized sector. They are grown on the farming lands. In the reaping season, the farmers will reap the cotton from the cotton fruit. So they are very small. What happens is, while picking up the raw cotton from the cotton fruits, there are chances that some mud particles are included in the raw cotton, then some leaf particles, some stem particles are included in the raw cotton. Right? That's why between spinning mills and farmers, there is one more trade which is called ginning trade. So ginning is again a process, and in order to carry on this ginning process, they are ginning industry. So the ginning mill people, they go to the farmers, they buy the cotton from them, and that cotton will contain number of impurities. So during the process of ginning, they do some manual grading. So to some extent, the mud particles are removed. In the process of ginning, what happens is the cotton seed is separated from the fiber, and the fiber is sold to the spinning mills, and the cotton seed is sold to the seed oil mills, cotton seed oil mills. Now that fiber will be the raw material for us. We are in spinning. So because in the ginning industry, the raw cotton is subjected to only manual grading, there are chances that still there are impurities in the lint. So we subject that lint into the blow room process. So in the blow room process, the air is blown with the heavy speeds. So when you send this cotton to the blow room, due to the heavy pressure, the mud particles, the leaf particles, etc., will be removed from the fiber, and they will be sent to outside through some other channels. This is exactly what happens in the blow room process. In order to carry on blow room, you have 50 blow rooms. In order to carry on blow room process, you have 50 blow rooms. So every blow room is a civil construction. Every blow room is fitted with the blowers. For every blow room, you have the manager. For every blow room, you have the workers. For every blow room, you have the electrical consumption. For every blow room, you have the depreciation of the plant and machinery. For every blow room, there is the depreciation on the premises. So for every blow room, these are expenses incurred every month. So the management wants to know what is the total cost of blow room number 1, blow room number 2, blow room number 3, blow room number 4, and so on. In that case, 50 blow rooms will be created as 50 cost centers. Clear? So you have to go into details as much as possible. We have to look into how the management wants to visualize the expenses. How the management wants to visualize the expenses. How the management wants to classify the expenditure for the purpose of analysis. Based on that, we have to create that many number of cost centers. There isn't any predefined principle that in this company code, you create this many number of cost centers. In this industry, you create this many number of cost centers. And in this industry, you create this many number of cost centers. There is no principle like that. Clear, no? That's how you have to consider, you have to decide how many number of cost centers you have to create. See, allocation criteria means which expense is to be allocated to which point of your organization. Point means it can be a department, it can be a place, it can be an activity, means it can be a service activity or production activity. So if you want to allocate the expenses and according to activity wise, each service activity is created as one cost center and each production activity can be created as one cost center. Clear, Gadi? Now, here we have to maintain the master records for the following objects in the cost center accounting. Number one, cost element, cost center, statistical key figure, activity type. So already we have created the master record for the cost elements. Now you have to maintain the master record for cost center, statistical key figure, and activity type. So I have explained what is cost center. Then I will explain later on statistical key figure and activity type. But this we will do tomorrow because I am feeling very much cold. I am not able to concentrate on the explanation. Right? I am skipping the words sometimes. So I don't want to continue. Okay. So if you have any questions, please ask me in tomorrow's class. So today we have to start the configuration in the cost center accounting. I have explained the concept and functions of cost center accounting in the previous class, and due to the Sankranti holidays, Pongal holidays, I did not take the class for previous 3 days. See, cost center accounting. So in the cost center accounting, first we have to maintain the master records for cost elements, after that the cost centers, after that statistical key figures and activity types. So already we have maintained the master records for cost elements in the cost element accounting. Now you have to maintain the master records for the cost centers. So for each cost center, we have to give an identification, and that identification cannot be anything as you wish. So you have to develop some naming logic for deciding the names to be given to cost centers. And also, if you remember, in the controlling area, at the time of creating the controlling area, we have given the cost center standard hierarchy 3366 underscore HIR. At that time, we have just given the name for the standard hierarchy. We did not create the standard hierarchy. Now I am going to show you how to create the standard hierarchy. One second, let me change the name, please. Okay. See here, as I said, first of all, you have to decide the naming logic to be followed. So for example, the cost center standard hierarchy, for example, the cost center identification can contain up to 10 digits, but I don't want to use 10 digits. I want to use only 7 digits. It's my requirement. It doesn't mean that always you have to use the 7 digits. Technically speaking, a cost center identification can contain up to 10 digits. Can contain, right? It's not the rule. Now, the cost center identification should contain 7 digits. It's my requirement. So the first 2 digits represent the company code. The next 2 digits represent the function such as production, services, marketing, HR, etc. And the last 3 digits represent the individual cost centers. So it's the user requirement. So based on this, how to define them? Here, we have given the hierarchy name 3366 underscore HIR. This is the name of the hierarchy we have given, right? Now, at the first instance, we are defining functions. So like finance, HR, manufacturing, etc., etc. For each function, right, we have to give an identification. Here, I am taking the functional requirement as the basis to create the cost centers. So first we are defining production function. For the production function, we have to give one name, right? So that name is 3301. 33 I have taken from the company code. The first 2 letters should represent the company code. So I have taken the first 2 digits from the company code. Then the next two digits represent the function. 01 stands for production function. So 3301 production function relating to company code 3366. Then 3302 services function means this is the services function relating to company code 3366. Then you have the marketing. For the marketing, I have taken 3303. Then for HR, I have taken 3304. Like that, at the first instance, you can define up to 99 functions. Clear? Then we have the HR function, right? Under the HR function, you have many activities. Recruitment activity will be covered under HR function. Internal training to the employees also will be covered under HR function. Then you have to maintain employee records. So the maintenance of or the employee administration is also covered under HR function. We have the labor welfare activities. Like that, many activities are covered under HR function. So in order to look after these activities, we have set up a separate department for each activity. For example, in order to look after the recruitment activity, we have set up one recruitment department. So this recruitment department can be created as one cost center. So for this cost center, you have to give one name. Like what? So this is the department under HR function, right? So what is the identification for HR function? 3304. Under this HR function, this is the first cost center. So 3304001 recruitment cost center. Then we have the training department. So the training department is to be created as a cost center. So I have taken the name 3304002. So whenever you look at the 3304, you can understand, okay, this is related to HR function. Under that HR function, this is the second cost center. So 3304002 training cost center. Then 3304003 labor welfare. Like that, under HR function, you can create up to 999 cost centers. Clear? So this is called hierarchy. Under each function, you can have any number of cost centers. So this hierarchy, I am going to show you how to create. Creation of standard hierarchy. SPRO, controlling, cost center accounting, master data, cost centers, define standard hierarchy. Controlling area is equal to 3366. Controlling area is equal to 3366. Click on enter. See, this is the hierarchy we have created, right? Now, under the hierarchy, we are going to create, under the hierarchy, please remember, under this hierarchy, first we are going to define functions, right? So, keep the cursor on 3366 underscore HIR. Click on create button. Click on lower level group. Under the hierarchy, we are creating the functions or groups. Group name is equal to 3301. Group name is equal to 3301. Description is equal to production function. Description is equal to production function. Click on enter. See, the production function has been taken over here. Now, under the 3301, you have to create services function, right? So keep the cursor on 3301. Click on create button. Group at same level, right? Same level we have, right? So click on group at same level. Group name is equal to 3302. Description is equal to services function. Click on enter. After that, we have to maintain 3303, right? Marketing function. So keep the cursor on 3302 services function. Click on create button. Click on group at same level. Group name is equal to 3303 marketing function. Click on enter. Like that, you can go on creating up to 99 functions according to the logic we have developed. So I'm creating only for 3 functions. Click on save. So from here itself, you can create the cost centers. Otherwise, you can create the cost centers in different screen. So let us create the cost centers in different screen. After that, we will come back to the hierarchy and we will see how that is appearing. See the next step. Creation of cost centers. Transaction code KS01. KS01 create cost center. KS02 change cost center. KS03 display cost center. Now, I am going to create production cost center. So the production cost center is to be created under production function, right? So we have to give one name. What is the identification for the production function? 3301, right? Under that, this is the first cost center. So 3301001. Clear? Cost center is equal to, write down there. Cost center is equal to 3301001. Valid from 1/1/2018. Valid from 1/1/2018 to 31st December 9999. Click on enter. Name is equal to department A. Name is equal to department A. So in the real time, we enter the name of the department, the name of the machinery, the name of the production process, and so on. But here, just like that, I'm giving department A, nothing else. Description is equal to department B, A cost center. Description is equal to department A cost center. Person responsible X. Means he is the person who is responsible for the monitoring the activities of this cost center. This person is responsible for the performance of this cost center. Then cost center category 1. So these cost center categories were already defined in the system. If necessary, we can also define our own cost center categories. But what is the significance of these cost center categories? I will explain you once we perform this step. But for the time being, I am taking it as a production cost center. Cost center category 1, production cost center. Hierarchy area. So in the hierarchy, to which node? This is related. 3301001 means production node, right? So hierarchy area 3301. Business area 3366. Currency USD. This is called object currency, controlling object currency. So the currency in which the controlling object is managed is called controlling object currency. Generally, the controlling area currency and the controlling object currency will be same. Generally, the controlling area currency and the controlling object currency will be same. So you know that cost center is called controlling object, right? So the business transactions in this cost center will be maintained in the currency USD. So this is called controlling object currency. I think Mr. Chandrasekhar some days back has asked what is the difference between controlling area currency and controlling object currency. Am I right, Chandrasekhar?
Yes, sir.
Now the difference is clear.
Yes, sir.
Okay. So currency is equal to USD. Click on save. And system is giving one warning message. Profit center accounting is active, but no profit center specified. So here, if you remember, in the controlling area basic settings, we have activated profit center accounting. For that reason, we have to assign the profit center in the cost center master record. But we did not assign the profit center in the cost center master record, and we are trying to save it. That's why it is giving the warning message. So what is the profit center? Why we have to assign the profit center in the cost center master record? We will discuss later on in the profit center accounting. But for the time being, it is only a warning message, right? So ignore the warning message. See, cost center has been created. So let us create one more cost center. This time also I am creating second production cost center. So cost center is equal to 3301002. See, if you are following, see the question posted by Chandrasekhar. Ultimately, company code currency and controlling area currency will be same. Yes, exactly. And also, it depends upon the scenario you are using. You know that there are two scenarios in maintaining the controlling area. Number one, controlling area same as company code, right? See, let us go there. Okay, KP. See, when you are using controlling area same as company code scenario, the company code currency and the controlling area currency will be same. That is quite 100% true, because there is no other go. When you are using controlling area same as company code, you have only one option, that company code currency will be taken as controlling area currency. In that case, it is true that the controlling area currency and the company code currency will be same. Till now clear, Chandrasekhar? Exactly, because only one company code is there. Now, suppose you have the second scenario. Second scenario is cross company code cost accounting. In that case, the controlling area currency can be any one of the following currencies. For example, if you press F4 here I have changed the assignment control, cross company code cost accounting, right? So when you are using the cross company code cost accounting, any one of these currencies can be your controlling area currency, means company code currency. For example, what is cross company code cost accounting? We can assign multiple company codes to one controlling area, right? This is called cross company code cost accounting. In that case, any company code currency can be your controlling area currency. Suppose you have the three company codes with the three different currencies, and you have assigned these three company codes to the same controlling area. In that case, any currency, the currency of any company code can be your controlling area currency. So what are the conditions that are to be satisfied to assign multiple company codes to the same controlling area? One is, all the company codes should use the same chart of accounts, and all the company codes should use the same fiscal year variant. But there is no condition regarding currency. The currencies can be different. So you have assigned three company codes to the same controlling area. So first company code currency is INR, second company code currency is GBP, third company code currency is Australia, AUD, Australian dollars. Because in these three countries, the fiscal year is same, April to March. So in that case, we assign these three company codes to the same controlling area. So the controlling area currency will be either INR, either GBP, or either AUD, Australian dollar. Clear? So the currency of any company code can be controlling area currency. I am telling you can be, it's not the rule, because you have the different choices here. Then controlling area currency. So yes, exactly. It depends upon the scenario you have selected, Gadi. So here I have selected cross company code cost accounting, right? That's why it is displaying these three options. Now controlling area currency. So I don't want to use the currency of any company code as the controlling area currency. I want to have a separate currency for the controlling area. Means you have assigned Indian company code, UK company code and Australian company code to the same controlling area. Now I don't want to use either INR, either GBP or AUD. I want to have USD for the controlling area as currency. That is also quite possible. In that case, all the business transactions of these different currencies are to be converted to controlling area currency, for which you have to develop the same settings what you have developed in general ledger. Then group currency. Group currency also can be your controlling area currency. Hard currency can be your controlling area currency. Index based currency can be your controlling area currency. Index based currency generally is used in countries where the inflation is very high. So global company code currency. Forget about 40, 50, 60. Generally, according to my knowledge, right, we used group currency. And some of the cases we used company code currency. Clear? So what I mean to say here is, when you are using the cross company code cost accounting, you have the number of choices. But when you use controlling area same as company code, right, you have one, see here Gadi, I changed it to controlling area same as company code, right? If you press on F4, see you have only one choice. Clear? Chandrasekhar, I'm sorry. Okay. Yeah, tell me, OB22. You are talking about group currency. Can you close your screen? Yeah. Chandrasekhar.
Yes, sir.
Can you close that screen? Yeah. See here, our company code is 3366. First of all, I will explain what is OB22 transaction code. Right? See, the OB22 transaction code is used to define additional currencies. See, for example, what is additional currency? What is your company code local currency? You know that company code local currency is there. So company code local currency means the currency you defined at the time of creating company code, that is called company code local currency. So when you enter your company code here and you click on enter, your company code local currency was taken over here. Currency type 10 means company code currency. Now, the business transactions of this company code 3366 are to be converted into group currency. What is group currency? The currency of your group. For example, you have the two company codes, Indian company code and US company code. Indian company code currency is INR and US company code currency is US dollar. Both the company codes are owned by European group. Now, the European group wants the financial statements of Indian company code and US company code in euros. I hope everybody is getting my point. You have the Indian company code and US company code. Both the company codes are owned by European group. Now this European group wants the financial statements in euros. Then what is to be done? The business transactions of Indian company code and the business transactions of US company code are to be converted into group currency, that is called euros. For that purpose, you have to maintain euros as additional currency for each company code. Getting the point? For US company code, you have to maintain additional local currency, that is called second local currency. So euros you have to maintain. Euros you have to maintain as second local currency for each company code. That second local currency is maintained in OB22 transaction code. So a company code can have one company code local currency. In addition to company code local currency, a company code can have two additional currencies. These two additional currencies are called parallel currencies. So how do we, and one more thing is, group currency is nothing but your client currency. So where we can see the client currency? What is our client here? 800, right? So there is one transaction code, SCC4. This is the basis consultant transaction code. See, our client is 800, right? Select the client 800, click on details button, currency UR. So this is called client currency or group currency. If you want to change it, right, you can click on this display change button. You can change it, but please don't change, right, in your practice. While doing the practice, don't change the client currency here. It leads to a lot of errors. Please don't change, right? If anybody changes, I can find who has changed the things, right? Then I'm very sorry to say that I don't allow them to the further classes, because the changing the client currency leads to very large number of mistakes. Then we have to change the server again. That's why I request everybody not to change the client currency. I'm just showing you different functionalities, nothing else. See, in OB22, you have to maintain the additional currency here. Clear, Chandrasekhar? Nothing. See, for example, I want to maintain group currency, right? So, group currency, how, sir, means you are asking me how to maintain the second local currency, or how to change the group currency? Oh, how to maintain the second and third currency. Suppose, for example, I want to maintain group currency as second local currency, right? Because
Yes,
the group currency was taken as your controlling area currency also, right? In that case, come to OB22, click on new entries,
oh,
company code 3366, click on enter. So the system will take the first, the company code local currency as first currency. Then I
yeah.
want to maintain group currency as second local currency, right? So currency type is equal to 30 group currency. Valuation is equal to 0 legal valuation. Exchange rate type. So at what rate type you want the company code business transactions to be converted into group currency, M or G or EB? You can define that exchange rate type.
Yes,
For
M.
example, M. Then source currency. What is the currency to be converted into group currency? Translation currency, or see, translation taking transaction currency as basis, or translation taking first local currency as basis. Generally we use one. Translation taking transaction currency as basis, right? Then transaction date type. Which date you want to take into consideration for converting? Whatever the exchange rate type, whatever the exchange rate that is existing on this date, or the rate existing on this date, or the rate existing on translation date. Generally we use 2. Then click on save.
Uh,
So in the 1 second, so you maintain second local currency. In the same way, you can maintain third local currency if necessary. In
so
addition to,
valuation will be zero, or we can change it to any other
sorry,
valuation field.
valuation field, right? It depends upon your purpose. Why you are maintaining the group currency as second local currency? Suppose if you are maintaining the group valuation, right? Then you have to enter 1. Suppose if you are maintaining the group currency according to your legal requirements, then you use 0. It depends upon your purpose. Why you are maintaining the group currency as additional local currency for your company code?
For consolidation purpose.
Yeah, consolidation purpose means group valuation.
When we will use third local currency, sir?
Sometimes what happens is, I will tell you one example. How to tell you that example? Just one second, let me think. I'm just putting them in the words, putting them in the logic. Yeah. See, for example, your group management is residing in Europe. Okay. But
Yes.
your group headquarters are in Germany. Okay. Then, see, listen to me very carefully. Your group management is residing in Europe, but the group headquarters are there in Germany. And you have the two company codes, Indian company code and the US company code. Now, the group management wants to see the financial statements in the group currency, Germany currency, right? And also their residing country currency. Now, if you take Indian company code, the transactions of Indian company code are to be converted into group currency, that is German francs, and also group residing country currency. For example, euros. In that case, Germany currency should be maintained as third local currency. So it is not possible to have more than 2 additional currencies for a company code in addition to company code local currency. Clear, Chandrasekhar?
Yes.
Now,
Thank
in
you.
addition to this, after maintaining the second local currency here, you have to maintain translation ratio for currency translation. That's only the step you require. You have to maintain the translation ratio for currency translation for the combination of your company code local currency and the group currency. That's it. Now coming to the current topic, create one more cost center. So I'm creating second production cost center. So cost center is equal to 3301002 in simple finance, right? So in ECC 6.0, you can maintain only 2 additional currencies in addition to company code local currency. But in simple finance, you can maintain up to 8 additional currencies in addition to company code local currency. See how functions, how extensively they have extended the functions in the simple finance. Simple finance is a wonderful tool, wonderful module, excellent module from all the perspectives. That's why every company is nowadays going for the existing companies. They are going for simple finance migration, and the new companies are also coming for simple finance only. Right? So, okay, coming to this current topic, let us create the second production cost center. Cost center is equal to 3301002. Second production cost center. So 3301 represents the production function, and this is the second cost center. So 3301002. Sorry, cost center is equal to 3301002. Valid from 1/1/2018. 1/1/2018 to 31st December 9999, means throughout the life of the enterprise, this is the cost center. Name is equal to Department B. 1 second, please. Yes, name is equal to department B. Description is equal to department B cost center. Description is equal to department B cost center. Person responsible A. Cost center category also 1. Production cost center. Hierarchy area 3301. Business area 3366. Currency USD. Click on save. Ignore the message. So let us create one more cost center. This time let us create service cost center, right? So the service cost center is to be created under services function, right? So what is the identification for the services function you have given? 3302. Under the services function, this is the first cost center, right? 001. Cost center is equal 3302 Click on enter. I'm sorry, valid from. 1 second, please. Yes, I am back. Name is equal to department C. Name is equal to department C. Description is equal to department C cost center. Description is equal to department C cost center. Person responsible XYZ. Cost center category 2 means services cost center. Service cost center. Hierarchy area 3302. Services no. So business area 3366. Currency USD. Click on save. Ignore the warning message. So for the time being, we have created 3 cost centers. Later on, we can create some more cost centers, right? We create some more cost centers. Now, let us go back to hierarchy. Let us see how the hierarchy is appearing now. Standard hierarchy. SPRO. Controlling. Cost center accounting. Master data. Cost centers. Define hierarchy. I mean, define standard hierarchy. See, against 3301, you have one arrow mark now, right? So you have linked 2 cost centers to 3301, right? If you click on this arrow, you can see the cost centers here. See, 3301, Department A cost center. 3301 Department B cost center. So if you click on this cost center, you can see the master data here itself. Cost center name, analysis period means validity period, name, description, person responsible, category. Clear, no? Business area, currency. So this is the hierarchy. This is the hierarchy. Suppose if you click on this 3302, 3302 001, one cost center only we have linked to this function, right? If you click on that, you can see the master data. This is called hierarchy. Clear? Now, here we have created 3 cost centers, right? And out of these 3 cost centers, for 2 cost centers, you have given the cost center category production cost center. For the 3rd cost center, you have given the cost center category services 2. So what is production cost center and what is service cost center? Put heading in the notes, please. Production cost center. Production cost center. It is the cost center. It is the cost center where the actual production is carried on. It is the cost center where the actual production is carried on. Where the actual production is carried on. Number 2. I will explain you. First take the notes. Number 2. Service cost center. Number 2. Service cost center. It is the cost center whose services are necessary to carry on production smoothly. To carry on production smoothly. To carry on production smoothly. Example, canteen cost center, power generation cost center, etc. Whether a cost center is a production cost center or service cost center, is decided by the nature of the business, and the nature of the cost center. Means, see, for example, there is no predefined rule where we can say that this is always production cost center and this is always service cost center. We can't say like that. You have to compare the nature of the cost center and the nature of the business. If both are related to each other, then that is called production cost center. Otherwise, service cost center. For example, our company code is in textiles manufacturing. So we are purchasing the power from outside. So the power purchased from outside is very expensive. Then our company has decided to set up one department within the company wherein we can generate the power, we use that power for our manufacturing purpose. In that case, power generation cost center is called service cost center. Clear? Suppose if your main business itself is generating the power and selling the power, then the power generation cost center is production cost center. Suppose generally one second. See, generally the canteen cost center is a service cost center, but if your main business itself is catering, then that is called production cost center. Like that you have to decide. Clear, no? So this is the general meaning of production cost center and service cost center. But from the SAP perspective, right? See, we have given the category 2. So what is the significance of this category in SAP? Right? Here, if you see the material, see, cost center categories. The cost center category controls the activities we can perform for every cost center created under the respective category. See, the cost center category controls the activities we can perform for every cost center created under the respective category. See, for every cost center, we can perform the following activities. Please remember, for every cost center, we can perform these activities. Number 1, posting of quantity particulars, posting of actual primary costs. What is actual primary costs? We will discuss later on. Posting of actual secondary costs, posting of actual revenues, posting of planned primary costs, posting of planned secondary costs, and posting of planned revenues. So these are the 7 activities you can perform for every cost center. But all the activities need not be required for all the cost centers. All the activities are not required for all the cost centers. In that case, for each cost center, I want to perform some particular activities. What are those activities you want to perform? Can be determined from the cost center category. See here, the cost center category controls the activities you can perform for every cost center created under the respective category. We can use the cost center categories already defined in the system, or we can create our own cost center categories. In most of the cases, the cost center categories already defined in the system are sufficient for the purpose. See, to create own cost center categories, transaction code OKA2. So let us go to OKA2 now. See, these are the categories. For the, see, one is production cost and production category, 2 service category. Here, for each category, you can maintain these postings. Quantity means you can post the quantities. Actual primary costs, you can post actual primary costs. Actual secondary costs, you can post actual secondary costs. Actual revenues, you can post actual revenues. Planned primary cost, planned secondary cost, planned revenues. So these are the postings you can do for each cost center. But all the activities are not required for all the cost centers. That's why you can control the activities from this screen. For any category, please listen to me very carefully now. For each category, if the quantity checkbox is selected, for each category, if the quantity checkbox is selected, you can post and maintain the quantity particulars for each cost center created under this category. Clear? For any category, if you select the quantity checkbox, you can post and maintain the quantity particulars for the category created under, for the cost centers created under this category. But as far as other checkboxes are concerned, the selected activities cannot be performed. Again, I am repeating. For any category, if you select the quantity checkbox, we can post the quantities. But for other checkboxes, the selected activities or the selected checkboxes cannot be performed. Means, for the production, quantity checkbox is selected, right? So you can post and maintain the quantity checkboxes, quantities for the cost centers create under the production category. But actual revenue was selected and planned revenue was selected. Means here it is the reverse meaning. Actual revenues cannot be posted and the planned revenues cannot be posted to the cost centers created under this category. And these values are automatically defaulted to the individual cost centers. Till now clear what is the impact of selecting quantity checkbox and what is the impact of selecting other checkboxes. If anybody wants, I will explain again. Okay, so these values are defaulted to the cost center which was created under this category. So where we can see the values. For example, we have created 3301001 cost center as production cost center, right? Let us go to KS02, change cost center. 3301001. Click on enter. See, for this cost center, we have given category 1, right? So for the category 1, quantity was selected. Means for the department A, we can post quantities. So where we can see the values. See, I did not touch the control data tab. At the time of creating this cost center, I have given information only under basic data, right? So click on control data now. What happened? See, there was a little bit disturbance for a while in my net. See, KS02 3301001. So for this cost center, we have given the category 1, right? If you go to control data tab now, record quantity was automatically selected. So from where this selection is defaulted? In OKE2, create your cost center categories. So for the production category 1, quantity checkbox was selected. So this selection is automatically defaulted to this cost center. Clear, no? Now, lock indicators. These are called lock indicators. So these activities cannot be performed if you select them. For example, actual revenue is selected, planned revenue is selected. Under the lock indicators, actual revenue is selected and the planned revenue is selected. Means these two activities cannot be performed for the cost center 3301001. So from where the selection is defaulted again? From the cost center category 1. Actual revenue was selected and the planned revenue was selected. So these two postings cannot be performed for production cost center. Clear? So if you want to create your own cost center categories, click on new entries, give one identification and you select the indicators as you wish. But in most of the cases, system defined cost center categories, system cost center categories are enough. Not optional. These activities can be performed for the cost centers. Not optional, right? These activities you can perform. Means you can post actual primary cost, you can post actual secondary cost, you can post planned primary cost, you can post planned secondary costs for the production cost centers. It's not the field status. It is the activities you can perform for the cost centers. There is no concept of optional, suppressed and required. Now, I hope what is the function of cost center categories is clear to everybody. Then creation of cost center groups. This we will see in tomorrow's class. Akanksha, you have any questions? Okay. Gadi. Okay. Madhusudan. Okay. Chandrasekhar. Prabi. Okay. Tafiq. Tejaswini. Okay. Then see you tomorrow same time. Okay, Tafiq. It seems that you are not attending the classes, right? But I'm sending you the recordings. Are you receiving the recordings? Are you receiving the recordings, Tafiq? Okay, that's fine. That's perfect. So it depends upon the situation, Gadi. In our example, I have taken on the basis of functions, nothing else. It depends upon the client situation and client organized structure. It's not that every time you have to take the same criteria or all the criteria. Remind me tomorrow, right? I will tell you that example, then we proceed further. Okay, then see you tomorrow same time. So yesterday we have seen the creation of cost center master records. So step number 3, creation of cost center groups. So what is the cost center group? See, based on the common parameters, the cost centers are grouped together, which are called cost center groups. So these are used for planning and reporting convenience. Here, yesterday we have created 3 cost centers, out of which 2 are production cost centers, the third one is service cost center. So we can create one group which includes the first two production cost centers. So they are called cost center groups. So the purpose of cost center groups is only for planning and reporting convenience, nothing else. And the creation of cost center groups is optional. So first let us create the cost center group. Later on you can understand, at the time of generating the reports, you can understand what is the convenience of these cost center groups. Okay. Transaction code KSH1. KSH1. Controlling area is equal to 3366. Controlling area is equal to 3366. If that step is not there, please add it. Click on enter. Cost center group is equal to 3366 underscore PROD. So you can use any name, just like that I am using 3366 underscore PROD. Generally in controlling, for the hierarchies and groups, we use underscores, nothing else. Otherwise you can use any name, just like that I am using 3366 underscore PROD. PROD for production. Click on enter. Description is equal to production cost centers for 3366. Production cost centers for 3366. Click on Insert Cost Center. This is called Insert Cost Center. Attach your cost centers. Means 3301001, 3301002. So two production cost centers we have attached. And please remember, while attaching the cost centers, you have to attach only production cost centers. And by mistake, if you attach service cost center, system will accept. So while assigning the cost centers, production cost centers, service cost centers, we have to be a little bit careful. It cannot differentiate. Please remember, system cannot differentiate between service cost centers and production cost centers. Even if you assign the service cost center to the production cost center group, system will accept. So as a user or a consultant, you have to take care of this. Click on Save. This is 3301002. See, both the cost centers have been taken over here. See, in our class, we created only two production cost centers. So we have created only, in our class, we have created only two production cost centers. So we could assign very easily. Suppose, for example, in your real time, there are 25 production cost centers. In that case, all the 25 production cost centers are to be assigned here. But here, you have only 5 lines. How you can assign? Here, if you click on this Insert Cost Center, system will add 5 lines. So you can click on 5 times, then there will be 25 lines, 25 cost centers can be assigned here. Otherwise, from number to number, if you followed any logic in naming the cost centers, you can assign from number here to number here. Then the system will take all the cost centers here. So this is called production cost center group. So how the group is convenient. This you can clearly understand at the time of generating the reports and at the time of planning. Now see the next step. Posting of transactions in FI. So first let us post the transactions in FI now. Then we will see how they are posted to controlling. I told you, the controlling component is always updated through postings from other modules only automatically. We cannot post manually into controlling, right? Let us see now. Transaction code F-02. So we have created salaries, wages and rent as primary cost element. So let us post salaries, wages and rent. Okay. 1 second. Document date is 17/1/2018. Type is SA. Company code 3366. Posting date 17/1/2018. Period 1. Currency USD. Posting key 40. Account is 4,100,000. This is similar to posting in F-02. There is no any change. Click on enter. Amount is equal to 10,000. Look at the screen, everybody, please. Here, business area 3366. Business area, write down please. Business area 3366. Now, look at the screen. Here, cost center is also mandatory. Why? Because here we have created salaries account as primary cost element. Then later on, in this GL account master record, we have changed the field status group to G004, which stands for cost accounts. In the field status group G004, we have selected business area, text and cost center as required entries. That's why while debiting the salaries account, these three fields are becoming mandatory fields. Business area and text are required entry fields according to financial accounting requirements, and cost center is the required entry according to cost center accounting requirements. So while debiting the salaries, the user has to enter compulsory the cost center. Cost center is equal, write down please. Cost center is equal to 3301 001. Now, why we are entering cost center 3301 Because these salaries were paid to the people who are actually working in this cost center. These are the salaries which are paid to the people who are working in this cost center. That's why these salaries are to be posted to this cost center. This is called direct cost. This is called direct cost. I told you, no, direct expenses means the expenses which are direct, which can be directly identified or posted to any department or cost center or production process, anything, right? So this is called direct cost, and also this is also called primary cost, because the cost is identified to the cost centers through primary cost element, right? So this is called primary cost. So primary cost and direct cost both are same. Clear, no? Text being salaries paid. Now posting key 50. Account is 2,100,000. Click on enter. Amount is asterisk. See, while creating the cash account, cost center is not there because cash account is not cost element. We did not create the cash account as cost element. So there is no necessity to assign the cost center there. Business area 3366. Text place. Click on save. See, document 4 was posted in the company code 3366. So in the current year, right, in the current accounting year, we have posted only 3 documents, and this is the 4th document we have posted. Now, do one thing. Here, you write one sentence here. Post all the cost elements to all the cost centers. Post all the cost elements to all the cost centers. Here, if you post only one cost element to one cost center, you cannot clearly understand the reports. That's why you post all the cost elements to every cost center in your practice also. So we have created 3 cost elements and 3 cost centers. So let us post all the cost elements to all the cost centers. So first we have posted the salaries to the first cost center. Now I am posting wages to first cost center. Procedure is same. Document date is 17/1/2018. Type is SA. Company code 3366. Posting date 17/1/2018. Period 1. Currency USD. Posting key 40. Account is 4,200,000. Salaries. Click on enter. Amount is 15,000. Business area 3366. Cost center 3301,001. So these are the salaries paid to the people. Sorry, these are the salaries paid to the workers who are working in this cost center. Text being wages paid. Posting key 50. Account is 2,100,000. Click on enter. Amount is asterisk. Business area 3366. Text plus. Click on save. Let us post the payment of rent for the first cost center. Document date is 17/1/2018. Type is SA. Company code 3366. Posting date 17/1/2018. Period 1. Currency USD Posting key 40. Account is 4,300,000. Click on enter. Amount is 20,000. Business area 3366. Cost center 3301001. First cost center. These are the rent. This is the rent paid to the premises of department A or this cost center. Text being rent paid. Posting key 50. Account is 2,100,000. Click on enter. Amount is asterisk. Business area 3366. Text plus. Click on save. Let us post the salaries, wages and rent for the second cost center. Document date is 17/1/2018. Type is SA. Company code 3366. Exactly. See the question posted by Chandrasekhar. While entering credit, we are not entering cost center. We are not entering cost center. That means as it is going to bank or cash. Yes, because bank account and cash account are balanced accounts. So balanced accounts cannot be credited as cost elements. So it's not identified with any cost center. Please remember, cost center is an area of activity for which we can identify costs. You cannot post revenues. That's why they are called cost centers. Posting date 17/1/2018. Period 1. Currency USD. Posting key 40. Account is 4,100,000. Click on enter. Amount is 12,000. Business area 3366. Cost center 3301002. Second cost center. So now we have paid the salaries to the people working in this cost center. Text being salaries paid. I am posting clubbing entry now. Posting key 40. Account is 4,200,000. Click on enter. Amount is 13,000. Business area 3366. Cost center 3301002. Text being wages paid. Posting key 40 again. Account is 4,300,000. Click on enter. Amount is 14,000. Business area 3366. Cost center 3301002. Text being rent paid. Posting key 50. Account is 2,100,000. Click on enter. Amount is asterisk. Business area 3366. Text plus. Click on save. WBS element is work breakdown structure element. So this is the concept, or this is the this is the concept used in project systems. So through the WBS element, the project systems module is integrated with the CO. Work breakdown structure element. WBS means work breakdown structure element. Now let us post the three cost elements for the third cost center. Document date is 17/1/2018. Type is SA. Company code 3366. Posting date 17/1/2018. Period 1. Currency USD. Posting key 40. Account is 4,100,000. Click on enter. Amount is 15,000. Business area 3366. Cost center, third cost center 3302001. Otherwise, you can press F4. From F4 list, you can insert. Text being salaries paid. Posting key 40. Account is 4,200,000. Click on enter. Amount is 16,000. Business area 3366. Cost center 3302001. Text being wages paid, posting key 40 again, account is 4,300,000, click on enter, amount is 17,000, business area 3366, cost center 3302001, text being rent paid, posting key 50, account is 2,100,000, click on enter, amount is asterisk, business area 3366, text plus, click on save. So like that, see document it was posted. So like that, the user will be going on posting the transactions every day and they are posted to the cost centers like this. Now let me check one thing, FB03. I'm checking the documents from 1 to 3. Okay. Now, see the next step. To view the documents in controlling. So till now, after starting controlling, we have posted 5 documents in FI. Now, 5 documents should have been automatically posted in controlling. In that case, how to display documents in controlling? That is what I'm going to show you now. To view the documents in controlling, transaction code KSB5. Document is equal to 1 to all 9s. Document number is equal to 1 to all 9s. Click on execute. See, these are the 5 documents that have been posted in controlling now. After starting controlling, today only you have posted 5 documents in FI. So 5 documents are correspondingly posted automatically in controlling. So 1, 2, 3, 4, 5. You can expand every document. This is called expand button. Now, see here, document number 1, object type, cost center. CTR means cost center. Object name 3301001. Date 17/1/2018. Then document header, CO object name Department A. So the name of the cost center is Department A. Cost element is 4,100,000. Cost element name salaries. User name Lakshman. Value in the controlling area currency 10,000. See, offsetting account type, yes. Offsetting account is 2,100,000. Similarly, you can interpret the document number 2 like this. Here, the purpose of controlling is to provide the information and every report in the form of statement. So, there is no concept of posting keys in controlling. There is no concept of debit and credit in controlling. Every report is in the form of a statement. So, this is the document number 2. This is the document number 3. See, for the document number 1, there is R4 is there. For document number 2, R5 is there. For document number 3, R6 is there. What is this R4, R5, R6? These are the corresponding document numbers in FI. For the controlling document number 1, corresponding document in FI is 4. If you double click on this R4, you can see the FI document. See, salaries accounted to cash. Clear? So salaries is a cost element, that is expense. So that is posted to cost center 3301001. Cash account is not a cost element. So it is not posted to any cost center. R means reference. R means reference document number. R means reference document. Clear, Chandrasekhar? See, for the CO document number 2, FI corresponding document is R5. See, if you double click on R5, system will take you to FI document. Wages accounted to cash. Clear, no? See the next step. Now, why the system has posted CO document also when you have posted the document in FI? You go back to the first page in the material. I mean, second page in the material. See, coin, transaction name coin, and CO postings from FI. So if you go to the first page now, we have defined the number ranges 1 to 1 lakh, and for that number ranges we have assigned coin process. At that time, I did not explain you what is coin, RKIU, RKP1, RKU1, RKU3. Now you can understand what are these processes. Here, coin means transfer postings from FI to controlling. So if you don't define the number ranges, one second, I am taking you to the transaction code where we have defined the number ranges. In the KANK transaction code, we defined the number ranges, right? See, sorry. Click on maintain groups. See, under the maintain groups, see, number ranges for controlling area 3366, coin. We have assigned a coin process to the number ranges. Coin means CO through postings from FI. Means CO updated through postings from FI. So unless you include this coin process in number ranges, you cannot post even in FI. If you don't include the coin process in the number ranges, system will not allow you to post in FI to the cost elements also. So in the case of coin process, right, the postings are transferred from FI to controlling also. See, coin process. Here we have posted the document wages accounted to cash. So in this business transaction or in this document, wages account is a cost element. So at the time of debiting the wages account, the user enters either department A or department B or department C. Notice that R is important here. You can enter, see, while debiting wages account, you can enter either department A or department B or department C. Will you be able to enter all the 3 cost centers? No, because there is only one field cost center. You cannot enter more than one cost center. That's why here I have used the word R. Means you can identify these wages only with one cost center only. That is called exclusive cost. Exclusive cost. So the cost is posted to a particular department only, particular cost center only. So that is exactly what happens in coin process. In the coin process, one FI document and one CO document is generated. This is what I have shown you. I have shown you both the FI document and CO document. CO document number 1, FI document number 4. So in the case of coin process, 2 documents are posted in 2 modules. One document in FI, one document in CO. Clear? That is the impact of coin process. Please remember, if you don't include the coin process in the number ranges screen, system will not allow you to post to the expenses even in FI. Clear? That is the impact of assigning the coin process to the number ranges. Regarding RKIU, RKP2, we will discuss later on, one by one in the cost center accounting only. Now, come to the next step. So we have seen the step number 5. To use the cost center wise reports, transaction code KSB1. Cost center is equal to 3301001 to 3302001. So I want to display reports for all the 3 cost centers. Posting date 1/1/2018 to 31/1/2018. Click on execute. Look at the screen. See, the total cost of your organization as on today is 1,32,000. Out of which Department A total cost is 45,000. Department B total cost is 39,000. Department C total cost is 48,000. Clear? So your total organization cost is 1,32,000 because you have 3 cost centers. Assuming that you have only 3 cost centers, the sum of the cost of the individual 3 cost centers is the total cost of your organization. So your total cost of organization is equal to 1,32,000, out of which 45,000 was incurred where? In the Department A. So out of 1,32,000 total cost, Department A is responsible for incurring a cost of 45,000. Means 45,000 is incurred in Department A in the form of what? Salaries 10,000, wages 15,000, rent 20,000. Now you know the origin of the cost. Now you can take the actions to control them, if possible. Out of 1,32,000 cost, Department B is responsible for incurring 39,000 cost. And out of 1,32,000 cost, Department C is incurred 48,000 cost. Or Department is responsible for incurring 48,000 cost. This is what exactly you can find out with the help of the cost center accounting. So with the help of the cost center accounting, you can find out the origin of the cost, where exactly and how much cost has been incurred at every point of organization. Clear? Now, here we have created only 3 cost centers, right? So I want to display the reports for all the 3 cost centers. But suppose if I want to display reports only for production cost centers, in that case, cost center 33010012, 3301 002. So click on execute. So total production cost is 84,000. Department A 45,000, Department B 39,000. Here we have followed some logic, right? And we have only 2 cost centers. That's why you can directly enter the production cost center range. But in your organization, in your client company, you have 162 production cost centers. You have total 162 production cost centers. And we did not follow any logic in naming the cost centers. In that case, how can you give the from number and to number? That's why we create one production cost center group. For that group, we assign all the 162 production cost centers as we have assigned in our example, right? Then, in that case, instead of entering the individual range, you can enter in the group 3366_PROD. Click on execute. Then the system will display the report for the cost centers assigned to that group. See, it is giving the It is showing the reports only for 2 production cost centers. Clear? That is the convenience of the group. Here you can enter either individual value range or group. Please remember, or group. That is the convenience of the cost center groups. Clear? No? Now, to make you understand more clearly, let us take one example. Let us display the balance in the GL account, salaries. FS10N. FS10N. I am displaying the balance in the salaries account in the month of January. So you have paid a salaries of 37,000. In the month of January, we have paid a salaries of 37,000. To whom and whom you have paid this 37,000? The user wants to know this information, right? Suppose if you double click on the total, that information is not available here. To whom you have paid 10,000, to whom you have paid 12,000, to whom you have paid this 15,000. This information is not available. For that, you have to display the cost center reports only. See, here in the KSB1, display cost center reports 3301001 to 330 You give all the cost centers. Then cost element 4,100,000. Cost element wise, you can also see the reports. Execute. See here, what is the total salaries? 37,000, right? So this 37,000 salaries has been paid like this. Department A 10,000, Department B 12,000, Department C 15,000. So total salaries is 37,000. Clear? Yes. So this is the use of the cost center reports. We can find out which department is responsible for how much cost. Clear, no? What is the use of the cost center accounting? Now, repost line items. So what is this repost line items? Repost of line items is called RKU3 process. See, sometimes there are some common expenses. For example, we have 3 sweepers. We have recruited 3 sweepers. Basically, these 3 sweepers were recruited for the purpose of Department A. You can maintain the salaries employee wise in the real time, but not in the cost center, in the HR. In HR, you can maintain the salaries, benefits, employee wise. Now, coming to repost of line items means what? This process is called RKU3, and this process is used to process the common cost. What is the common cost? For example, this month, in the month of January, we have recruited 3 sweepers, and these 3 sweepers are basically recruited for the purpose of Department A. Means they are in the muster rolls of Department A. But in reality, they are also rendering services to B and C. See, they are technically, these 3 sweepers are in the roles of Department A. But in reality, they are rendering their services to B and C also. So, 31st January, we have paid wages to these 3 sweepers. Due to the technical fact that they are in the roles of Department A, while posting to wages, these salaries of 10,000 was posted to Department A. But in reality, they are rendering services to B and C also, no? So in the cost accounting, we have to consider always the realistic information as far as possible. As these three sweepers are also rendering services to B and C also, based on some ad hoc basis or in some ad hoc proportion, you apportion this cost to B and C also. This is called RQ3 process. So here, from here to here, this is called coin process. Because we are identifying these wages of 10,000 only the department A, only with the department A. Because technically these three sweepers are in department A master roles only, right? That's why here coin process is used. Means one FI document is posted and one CO document is posted. Then you take the amount of the CO document. Then you take the amount of the CO document. Then we reapportion to other cost centers. What is the amount of the CO document now? 10,000. Out of this 10,000, I want to keep 3,000 to department A. And I want to keep 5,000 to department B and 2,000 to department C. And is important here. Means for all the three cost centers, we are apportion the cost. This is called common cost. Clear, no? So here, this activity is called RKU3. So in the case of RKU3, only CO document is posted because we are performing the activity among the cost centers only, and the cost centers are available only in the controlling only. That's why only CO document is posted. But there will not be any change in FI document amount. Only the amount will be reapportioned in the controlling among the cost centers. And there will not be any change in the FI document amount. This is called repost of CO line items. So here, see, here the cost is transferred document wise, single document wise. In this, only CO document is generated. So these are all the user requirements. There are many common expenses. In that case, how to process common expenses? See the next step. Repost line items. Transaction code KB61. Document number is equal to 5. Here we have to enter the FI document number. Document number is equal to 5. Company code 3366. Fiscal year 2018. And you remove all other fields. If they are displayed, you remove all other fields. Click on execute. See, for the FI document number 5, corresponding CO document number is 2, whose amount is 15,000. And this 15,000 was posted to 3301001. So out of this 15,000, I want to keep 5,000 to department A. So value transaction currency is equal to 5,000. You remove 15,000, you enter 5,000. Value transaction currency is equal to 5,000. Account assignment is equal to 3301001. Click on enter. See, remaining amount has been taken over here, 10,000. Out of this 10,000, I want to keep 4,000 to department B. Value transaction currency is equal to 4,000. Account assignment is equal to 3301002. Second cost center. Click on enter. See, the remaining 6,000 was taken over here. So, value transaction currency is equal to 6,000. Account assignment is equal to 3302001. Click on save. Now see the next step. To see the CO document after reposting, KSB file. Document number is equal to 6. Otherwise, you can enter 1 to all 9s. Document number is equal to 6. Click on execute. So this is the 6th document and details can be expanded. So this is how we have to interpret the document. See, we have posted total 15,000 to department A, right? So department A, first we have transferred 5,000 to department A. So department A, 5,000. Then from where this 5,000 was transferred? From the department A itself, original amount, right? So department A minus 5,000 means 5,000 was reduced from the original amount posted to department A. Then department B, 4,000. From where this 4,000 was transferred to department B? From department A. So department A minus 4,000. Then department C, 6,000. So from where this 6,000 was transferred? From department A. So for the department A, minus 6,000. Clear, no? This is how we have to interpret the documents in controlling. Then what is this K2? Controlling reference document number. That's how user can understand, okay, this is the document only posted in a CO. K2 means for this document number 6, the corresponding controlling document is 2. K always stands for controlling. So in controlling, every transaction code starts with K, most of the cases. So K for controlling. Clear, no? Now, what is the, see, for the document number 2 in controlling, what is the corresponding FI document? 5, right? Let us display the document number 5 in FI. I hope everybody is following. FB03. See the document number 5. There is no change in the FI document amount. But we have taken this amount into controlling. In the controlling, we have reapportioned to other cost centers. Clear? So in the case of RKU3 process or repost of CO line items, the cost is transferred single line item wise. Then repost of costs to repost multiple line items. Here, I will take one example and I will explain. See, the repost of, before that, if you want to perform repost of CO line items, I am coming to again CO line items. If you want to perform repost of CO line items, we should have defined a number ranges for RKU3 process. See, number ranges. We have already defined number ranges for the RKU3 process. See here. RKU3 has been assigned under the number ranges. So I explained you coin process till now, RKU3 process till now. Suppose if you did not define the number ranges for RKU3, you cannot perform this activity. Repost of line items. Clear? Now, repost of costs. What is the repost of costs? See, the repost of costs is identified with the name RKU1. Again, if you want to perform this activity, you should have to define number ranges for RKU1. See, RKU1 was already included in the number ranges. Now you can perform repost of costs. But what is repost of costs? See, in the repost of CO line items, you have transferred the cost line item wise to other cost centers. Line item wise means single document wise. In the repost of CO line items, you have transferred the cost single document wise. But in the case of repost of costs, you transfer the cost from one cost center to another cost center, cost element wise at the end of every month. Means, for example, we have some production cost centers and we have some service cost centers. Always it's a cost accounting principle that the cost of the service cost centers should be borne by production cost centers ultimately. So for that purpose, at the end of every month, you transfer the cost of service cost centers to the production cost centers. For that purpose, we use repost of costs. And sometimes, let us take one more example. Just 1 second. One second. Yeah. So, for example, you have department A. So the volume of organization, the size of the company has been growing in size. The size of the company has been growing like anything. So size of the company is growing means what? The volume of the activities in the departments are growing. The volume of activities in the cost centers are growing. So the volume of activities of department A have been growing like anything. So the management has felt that management of department A has become very difficult. So they have taken a decision today to split the existing department A into department P also. Now at the end of the month, we have to analyze department P performance also. No? That's why logically a part of the expenses identified with the department A till now should also be transferred to department P. So department A till now was posted with rent and salaries. So a part of rent of department A should be transferred to department P. A part of salaries of department A should be transferred to department P on some ad hoc basis. This is one purpose for which we can use repost of costs. See, basically in the repost of costs, you can transfer the cost from one cost center to another cost center, cost element wise. So based on the requirement, based on the suitability, we can use this activity for many purposes. One more purpose also is there. We can rectify wrong allocations. For example, we are posting rent account data to cash. FI document is same. There is no any error in the FI document. So actually this rent is to be posted to department B, but by mistake the user has debited to department A. In that case, you can transfer this total rent from department A to department B. Like that, for different purposes, we can use this repost of costs. So in the repost of costs, what happens is the cost is transferred from one cost center to another cost center, cost element wise. Here also only CO document is posted. Because we are performing this activity only among the cost centers and the cost centers are available only in the controlling. That's why only CO document is posted. Clear? KB11N, transaction code KB11. Cost center old is equal to 3301001. Means from this cost center, we are transferring the costs. Cost element is equal to 4,100,000. Amount is 2,000. Cost center new is equal to 3301002. Second cost center I am transferring. That's it. So you have transferred salaries of 2000 from department A to department B. Suppose if you want to transfer another cost element, same procedure. 3301001 cost element to 4,200,000. Amount is 3000. Cost center new 3301002. Cost center new means the cost center to which the cost is transferred. Yeah, I will tell you. See, 3301002. Clear? Click on save. So document is posted under number 7. Now see the next step. To view the report KSB1. Cost center is equal to 3301001. No, I did not post two documents. In the same document, I posted two cost elements. Within the same document, I transferred two cost elements. Document is only one. Gadi. Yeah. So I am displaying the cost center report. Cost center 3301001. Exactly. Yes, we have transferred the cost from one cost center to another cost center. So cost center is equal to 3301001 to 3301002. Execute. One second. See here, in the department A, salaries minus 2000, wages minus 3000. In the department B, salaries 2000, wages 3000. Now, no. See, here in the repost of costs, we don't transfer the costs document wise. You transfer the cost element wise. That is the difference between repost of CO line items and repost of costs. In the case of repost of costs, the cost is transferred from one cost center to another cost center cost element wise. Means cost element total wise. But in the repost of CO line items, the costs are transferred document wise. See, a cost element can receive the amount from different document numbers. Suppose, for example, what is your total salary in the department A? What is the total cost of department A? Salary something, wages something, rent something. So this cost was posted to department A through different document numbers, right? But at the end of the month, we are taking the salaries which was posted to department A through different document numbers. So in the repost of costs, you transfer the cost from one cost center to another cost center cost element wise. I will take one example. Yesterday, you paid wages to some of the employees in department A. So yesterday you posted wages accounted to cash, that was posted to department A. Today, to some other employees you have paid wages to the same department A. So today also you are posting to department A. And tomorrow you have paid wages to some other employees to department A. So tomorrow when you are posting to wages, you identify them to department A. Now department A total wages cost is, for example, 20,000. So this 20,000 is accumulated from different documents. Yesterday one document, today one document, tomorrow one document. So the total wage cost of department is 20,000, for example. This 20,000 was accumulated with the department A through different document numbers. Yesterday document number, today document number, and tomorrow document number. Still no clear? Now, we are taking out of this 20,000 wages, we are transferring to some other department. This comes under repost of costs. Till now clear, Gadi? Now, coming to repost of line items. Yesterday, we have paid wages to some 10 employees of department A. Okay. In this 10 employees, 3 sweepers are there. These 3 sweepers are rendering services to B and C also. So yesterday when you have posted the wages to these 3 sweepers, a single document, no? So the wages to these 3 employees will be reapportioned to B and C, which is called repost of CO line items. Yesterday you have posted one document, right, wherein you have paid wages to these 3 sweepers. So these 3 sweepers are also rendering services to B and C. That's why yesterday when you have posted the wages to these 3 sweepers, a single document is posted. Then in that document, you have taken the first line item, that is wages, you have reapportioned to other cost centers. That is the difference between repost of CO line items and repost of costs. Now it should be clear. Yeah. Now, one more scenario I will tell you. Here you can see salaries in the department A, salaries minus 2,000, wages minus 3,000, right? Minus means transferred from this cost center. The department B, salaries plus 2,000, plus means debit, and wages plus 3,000. Clear? That's how you can interpret the reports. Now one more scenario. For example, I am the user who is having the access to the display of reports of department A. So I am displaying the report for department A, 3301001. So I can see that in my cost center, please remember, in my cost center, I can see that salaries minus 2,000, then wages minus 3,000. So I can understand salaries of 2,000 and wages of 3,000 was transferred to which cost center? Just now we have done. That's why you can easily understand to department B we have transferred. But this report I am displaying at the end of the January. But you have transferred the cost today on 17th. On 31st January, how can you remember this? So the user wants to see to which cost center this 2,000 was transferred and to which cost center this 3,000 was transferred. For that, we can add the columns. See here, this is called actual cost to line items. Means it is similar to line item report. So in every line item report, right, there is the change layout icon will be there. So click on the change layout. Now you can add the columns here. Partner cost center. Select the partner cost center, transfer it to left side table. CO partner name also should be there. See, CO partner object name. You transfer these 2 fields, then click on enter. See, 2,000 was transferred to 3301002 partner cost center. What is the name of the partner cost center? Department B. 3000 was transferred to 3301002 Department B. Please remember, in every line item report, we can add the fields, we can remove the fields. So these are the two very important activities in the cost center accounting. Other activities are also there. Those activities we will discuss in tomorrow's class. Akanksha, you have any questions? Okay. Alok, I'm sorry. Alok, any questions?
So, just one question. In the earlier classes, we have selected optional entry for partner business area.
Yes.
So, what is partner business area?
See, actually, that is used for the purpose of consolidation business areas. See, consolidation business area means they are used to prepare P&L account and balance sheet. For example, region-wise. For example, you take India, you have the Tata Group, Tata Steels Limited, for example. So the Tata Steels Limited is doing business throughout India, and for the purpose of administration convenience, they have segregated the total operations in India into 4 regions: Eastern region, Northern region, Southern region, Western region. Okay. So each region, they want to find the profits from each of the regions also. In that case, each region is created as one consolidation business area. But suppose, for example, if you take Northern region, you are doing business in Delhi, you are doing business in Panipat, you are doing business in Chandigarh. Okay. So Delhi, Panipat, Chandigarh, they are the business areas. They are related to Northern region. So when you create Delhi, Chandigarh, Panipat as business areas, you can find the profit from the Chandigarh, Panipat and Delhi, right? Now, these 3 business areas are related to Northern region. Now, when the management wants to know what is the profit from the total Northern region, we assign these 3 business areas to the consolidation business area. So, the partner business area means to which consolidation business area that has to be posted. That is the meaning of partner business area. So where we can define the consolidation business areas in the enterprise structure. Always the organization units are defined in the enterprise structure. SPRO, enterprise structure, definition, financial accounting, maintain consolidation business area. Click on new entries. You can define any number of consolidation business area. For example, A, Northern region, B, Southern region, C, Western region, D, Eastern region. So you have already created the individual business areas, no? Right? Then these individual business areas are to be assigned to consolidation business areas. They are done in the enterprise structure assignment. See, assign business areas to consolidation business area. Multiple business areas can be assigned to one consolidation business area. So, business area is assigned to consolidation business area only. So, partner business area means it's nothing but your consolidation business area. Clear, Alok?
Okay, sir. Thanks.
Gadi, you have any questions?
Hello. Yes, sir. Sir, yesterday we have created the cost centers on a function basis.
Okay.
Could you give me 1 or 2 examples for other basis? Why? Because I wanted to see we have assigned cost categories, production and service centers, services basis.
Okay.
For other cost centers, how we can, what are the other categories we can assign?
Suppose, for example, you have the sales function, right? So, in the sales function, you have many departments. Like, for example, you are selling chemicals. So, you have the chemical sales department. You are selling medicines, right? So, medicine sales department is there. Then, you are selling generic drugs. So, generic drug sales department is there. So all these sales department will be coming under sales function. So generic sales department, one sales cost center. Medicine sales department, one sales cost center. Then what do you say? What is the other thing I have told you? Chemicals. Chemical sales department, another cost center. So at the time of creating those cost centers, you have to give the cost center category three sales. Now, in the Hyderabad business area, you have the Hyderabad business area, Bengaluru business area, Mumbai business area. So in every business area, the administration department, right? So every administration department of every business area is created over one cost center. In that case, you enter 4. Clear, no?
Yes, sir. It looks like all are function basis only.
Exactly.
What are the other basis, sir?
No, I have taken the business area also, no. Now I have taken the business area as criteria. So in Hyderabad business area, Mumbai business area, Chennai business area, Bengaluru business area, you have the administration cost centers. So each administration cost center of every business area is to be created as a cost center. I mean, every administration department of every business area is created as a cost center. And for the manufacturing process, already I have taken the linked manufacturing, spinning mill manufacturing process. Do one thing, if you have worked in any organizational unit, right, whether it's a service or manufacturing, right, give me that example, then I will show you how to design the cost centers for that.
Okay, sir. Oh, thank you very much, sir.
Yeah. Jerisha, any questions?
Sir, I had a doubt, sir. Sir, you said that you will sell the FI resume, sample resume, sir.
Yeah, I have not yet completed the classes, no. There is no use if I send you the resumes now, because you cannot claim that you learnt FI. As a FI consultant, you do get the job. You have to claim that you are working as FI CO consultant.
But in America, they have given, there is an account payable job for a account payable job only they are asking, sir.
Okay.
The responsibilities are only for the account payable.
I will send you the website.
Okay, sir.
No problem. If that is the requirement, I will send you now. No issues.
Yeah, and there is only the accounts payable, and that the requirement is like that. So that's
Okay. Chandrasekhar, any questions? No problem. See, Chandrasekhar, there is no concept of material question or silly question. Doubt is a doubt. For me, it's silly. For you, it is very important. That's why don't hesitate to ask any question in the class. There is no concept of silly question or important doubt or silly doubt. Doubt is a doubt. Suppose if you ask me what is debit, I have to explain you. For you, it is important. For others, it is not important. But you are also part of the class. I am not talking about you only. Everybody else, I am talking same thing. So, whenever you have the doubt, don't hesitate to ask the doubt. There is no concept of silly doubt or important doubt. This is applicable for every student in the class. Okay then. Prabhi, you have any questions? Prabhi, any questions? Okay. Okay, then see you tomorrow same time.